Yeah. What happens if the Fed actually pushes things out a little bit further? That's where the risk lies in people's portfolios at the moment. What are we going to see in terms of the single stocks this morning? I don't think it's going to move the dial that much, other than some of these bigger tech companies. So here we go. European equity markets are about to trade. You've got a number of different factors at play here this morning, but we are waiting for the Fed. So markets are open here in Europe right now. We'll start getting an idea of what is going to be moving around. Looks like the FTSE 100 is opening absolutely flat. Absolutely flat. Like, nothing to see here. We are going to wait for the Fed, it seems. Below the surface, you're going to get some sector moves. Below the surface, you're going to get some single stock moves as well. Looks like Novo Nordisk is opening with a decent pop this morning in terms of the impact that it's going to have. I suspect it probably will end up being a $500 billion company this morning. Looks like it's opening up 3.2%. It's the biggest points gainer, Critty, on the Stock 600 so far.
I think what's interesting, though, is take a look at what is your biggest laggard on the Stock 600. Your two biggest laggards, ASML, SAP, there's your tech read-through. Both declining, well, ASML declining almost 1% there, SAP about 0.5%, but still your biggest weight, it is still ultimately a sectoral story.
It is still sectoral. Tech's coming through. Look, Santander's a bit of a surprise to me. That stock is popping. It's up by 2.36% this morning. So the indication's certainly wrong on that one. We thought it was going to be fairly flat. Looks like actually the market is seeing a fairly positive story. Maybe it was what Anna Boating was saying to us a few minutes ago. She sees a difficult macro backdrop. She sees a difficult operating environment. She thinks her bank is going to outperform in that space.
Yeah, but look at what's in the top 10 movers as well. BNP is right on its tail when it comes to Santander, which I think it's a really interesting dynamic that people are so positive on the banks right now, specifically European banks, given the macro environment that we're talking about. If you were expecting your net interest income to drop, why would you lean into that?
Yep, fair point. Fair point. Novo Nordisk is a $500 billion company for the first time. It is leading Europe this morning in terms of the points add that it's giving to the Stock 600. The healthcare sector is the best performing sector. Unsurprisingly, on the back of that, healthcare is up by around 0.8%. Basic resources, travel and leisure, insurance also doing well this morning. But as Critty, as you pointed out, understandably, this is not a shock. Technology, for what it is here in Europe, is down. Technology sector down by around 0.6%. Universal Music down by 3.4%. I'll find you a reason for that. But basically, this morning, dominated by the healthcare sector, I think, with a little bit of banking thrown in as well, with Santander doing better than anticipated.
Well, I'll give you a reason for that.
Okay.
The idea that there are reports of an expiration of that TikTok contract. Are you a TikTok fan?
Massive TikTok fan. Yeah, huge.
This is where you get all your Super Bowl and Taylor Swift news.
Absolutely.
Naturally. Well, but still, I didn't expect it to drop by 3.4% in that, just on that report.
Okay. I'm glad you could find a reason for that. But
Bloomberg Terminal, everybody.
TikTok news. We've got it right here. So yeah, I think probably as expected. Look, single stock news, bit of a sector play. We now wait for the Fed.
Right, and I'm curious then again how much that actually changes. Does the macro even matter this time around when everyone's forecasting cuts or even a pivot to come in March? How much groundwork does Jay Powell really lay?
So do you think they are? Do you think the market is anticipating March?
I think they are anticipating March. I think you even have the backing of Goldman. You have like that Goldman rubber stamp on that.
So if the Fed doesn't validate March, what kind of a market reaction?
But how can they validate March? Because that would just pull up those expectations. You would have that immediately positioned. Well, that's exactly what Jay Powell doesn't want to do.
They don't like to shock the market. So if it's March, they have to say March this time round. They have to set the market up for March. If they don't set the market up for March...
What's the alternative, I guess is my question.
May, June... We're going to push it out a little bit further. You don't get validation of March. March is only priced at 50-50. The Fed's got reason to push it beyond that. So it doesn't justify March. But the market's, but as Mark was saying, the market's already pushed beyond March.
Yeah.
And as a result of which, that wouldn't be that big a surprise.
Yeah.
Anything beyond that, if the Fed turns around and says, actually, we think the economic data is stronger than we're anticipating, we think the stock market is running away, it's creating a wealth effect, that would be a problem for the market. But I think pushing beyond March, I don't think is going to be.
I think March is when they give you the indication for later on. But I think it's too soon here. I think we may be a little bit early here. But who are we to judge? As the market looks to when those central banks will actually cut those rates, well, take a listen to just one take. We spoke, of course, to the CEO of Norges Bank Investment Management, the world's biggest owner of publicly listed stocks. And by the way, one of the early movers on the tech space. We asked him about the challenges of taming inflation. Take a listen to what he had to say.
I think that inflation could be tougher to get down than what some people think. We are seeing wage demands across the world being pretty strong. This is something that hits all the companies, and typically what we see after a round of wage increases is that the companies raise prices to offset that kind of cost pressure. So that's one of the risks we are looking at. We are looking at geopolitical risks. So I don't know, it doesn't add up to a very happy cocktail.
And on top of that, so he's saying that there isn't actually perhaps that much momentum behind the inflation story. It's always that last mile. But then you get the latest inflation numbers coming out of France that we just got about 20 minutes ago. CPI easing way more than expected. And this is the lowest level since before Russia invaded Ukraine, driven mostly by those energy prices. I wonder how long that lasts in the context of the geopolitics. I want to bring in a true expert here just to kind of dive in deeper to that contrast. Evelyn Herman, European economist over at Bank of America Global Research, joins us this morning. Evelyn, we keep hearing this over and over and over again, that it's the last mile that's going to be the hardest. How hard will it be?
Yeah, good morning. From our perspective, the last mile is just going to pass like all the other ones before. So we are expecting euro area inflation to head back to 2% in August in our current forecast. That's for the euro area as a whole, and then further below actually in 2025. So we expect an undershoot of headline inflation. Core inflation is going to follow that because the ECB has hiked policy rates very far. The economy is weak, and yes, we're seeing high nominal wage growth at the moment, but it is really even only a partial compensation for the inflation that we've seen over the last years. So overall, we think we're heading we are in the middle of a disinflation trajectory that has legs and that is going to stretch into 2025 even.
What are we not seeing here? What are the markets not seeing? And I'm curious how you price in geopolitical risk here. We know that the Federal Reserve, the ECB, historically have never hiked in the face of geopolitical risk. But then does that almost ensure an insurance cut? What do you think?
So from an ECB perspective, you actually see a lot of data in the euro area that is disinflating very fast. We've seen in the goods sector that disinflation has progressed extremely fast. But even if you look at alternative indicators, inflation components that are very domestic demand intense or high touch components, all of those are disinflating. And it's not about looking at year-on-year comparisons. We started to look really at seasonally adjusted month-on-month developments in order to get a better grasp of the current momentum. And what we are seeing here is that even those elements that are really domestic demand driven are disinflating, and that should transpire in year-on-year rates while in the summer or later, in the summer actually. That's when we really see inflation moving lower. What are we missing, or how do geopolitics play into here? We are obviously looking at the shipping cost increase. There are a lot of quantifications out there on how to measure or how the pass-through could be on inflation. As of today, we would see that as a risk more than impacting our base case, because the initial conditions, the macroeconomic backdrop today is very different to the last time we've seen those shipping cost surges in 2021, 2022, right? We are facing weak demand. We are having very tight policy. The goods sector is no longer in this very wonky supply-demand imbalance whereby you have a lot of pricing power. All that should mean that today's any exogenous cost push factors today, shocks today, might impact consumer price inflation a lot less than in the past, rather affecting margins of corporates and thereby not really changing the ECB.
The ECB, Christine Lagarde, are talking a lot about wages right now. How strong is wage growth going to be? How big a factor is that going to be in terms of when policy ultimately does get cut? If we do see strong wage growth coming through the spring, does that push back the ECB's timing on cuts to when?
So our base case is the ECB starts cutting in June, exactly because they want to see domestic inflation moving lower. They want to see wage growth being past peak, and a lot of indicators we're seeing already today would point in that direction. Wage growth today is strong, but as I mentioned before, if we look at real wages, they actually remain well below the levels that we would have previously expected, and that arguably changes a little bit the capacity of nominal wage growth to really pass through into inflation. Now, from what we gather from the economy, growth is rather weak at the moment. Monetary policy is working. The labor market has lost some steam, so we are working under the assumption that wage growth will ease throughout 2024, so that by the end of the year we're closer to a wage growth dynamics of perhaps 3.5%, and then moving further below, possibly in 2025 again. And that should again, if that goes to plan,
When cuts come, how quickly do they come? In what form do they come? Do we get cuts at every meeting? Do we get a couple of cuts, wait and see? What do you think the sort of cadence is going to look like?
Our base case is for June, then quarterly in 2024, but then an acceleration of cuts in 2025 with 1 cut per meeting until we're back at the deposit rate of 2%, which is the estimate of the Governing Council of neutral rate today. Given the disinflation we are seeing in monthly inflation data really at the moment, we wouldn't rule out the risk that the ECB really is going faster. So we would expect increments of 25 pips. They're probably not going to panic, but we could imagine an alternative scenario where the ECB is starting to cut every meeting already in 2024, getting back to 2% faster than we currently anticipate. That scenario to us seems more likely at this stage than an ECB that cuts prior to June.
Evelyn, thanks very much indeed for the update. We'll continue to watch that data come through. We're going to get a series of inflation numbers throughout the morning. We'll get the German numbers a little bit later on. Evelyn Herman, European economist at Bank of America Global Research. Thank you very much indeed. We need to talk about some individual stocks. The morning is about individual stocks. This afternoon's about the macro. Let's talk single stocks now. Joe Easton's here. Joe, Hennes is getting absolutely battered this morning.
Certainly is, Guy, and we're starting in the fashion retail space today. H&M dropping as much as 10% at the open. That was the biggest decline since May 2022. They've got a new CEO coming in, but this isn't about him. This is about the margin guidance. They are softening the guidance on reaching 10% margins within the next few years, partly due to them having to discount more goods, more clothes, also seeing higher freight costs, and therefore cutting that margin expectation for the massive Swedish retailer. And as such, we're seeing a read across in AB Foods. Remember, the owner of Primark, we had a strong report out of them just a couple of weeks ago. And also Zara, the owner, Inditex in Spain, declining as well, and Next too. All of those firms, as I say, strong reports, this coming as a bit of a surprise. So that is definitely the weakest spot in terms of sectors today. Then we'll have a look at a couple of other earnings that we had in stocks to watch. We've got 4 stocks on the screen, 3 of which are in the pharmaceutical space. Novo Nordisk gaining around 3% at the moment, the unstoppable beast in the obesity space. They are actually now, as you mentioned earlier, seeing their market cap topping $500 billion for the first time ever. But the weak one at the top of the screen here is Novartis. Now, they've missed on a couple of key drugs here, including muscular function drugs and other asthma-related products as well, according to analysts today. Then we've got Glaxo, not too much of a move in that one, down 0.3% there. It was down around 1%, coming up a little bit now. They are seeing some weakness in their shingles drugs, according to analysts, so that's the negative read on GSK. Then Banco Santander, you had Ana Botín on earlier, and they are continuing to benefit from those rising rates over in Spain from the ECB, but those, of course, expected to come down very soon, potentially some weakness there. Also, that loan loss provision that was mentioned earlier as well, a lot of that related to the property sector. So those are the main ones today, but Novartis clearly taking the biggest hit, and Novo Nordisk continuing to rally as well. Then I'm going to look at UMG, Universal Music. You mentioned that one. This is a very interesting one. A dispute with TikTok. We all can't stop scrolling on that one. Speaking from my own experience with that, a dispute over the royalties paid to artists. TikTok has put out a statement saying that Universal is trying to get too much out of that, too much from the company. So that will go on for a while. The contract between the two is actually ending this month, so they haven't got long to try and fix this. But Universal getting hit today on potential fractures in that relationship. Then finally, there's just one rating change that caught my eye this morning. This one is in the banking space. Deutsche Bank, there we go, down at 1.3%. It opened up little change, but Citi downgrading Deutsche Bank. Now, Citi actually had a sell rating on Deutsche Bank for around 6 years. Then last year, they finally went buy, but today they're removing that rating. They go down to neutral, and they're saying that it's the investment banking division that is weakening. Following the results from the likes of JP Morgan, Morgan Stanley, these firms seeing slower fixed income revenue. Citi warning that Deutsche Bank will see the same and goes neutral on that one. As I say, down 1.4% in the weaker markets for Deutsche Bank.
Joe Easton from our equities team, we thank you so much for walking us through that a couple of those major stock stories. Guy, it is a tale of two pharma for me when you look at index contributors. Your biggest index contributor to the stock 600, Novo Nordisk. Your biggest weight, Novartis.
There we go.
What does that tell you? Is there even a read-through of that?
Well, I'm not sure there is. They're such different businesses.
Yeah.
What is happening with Wegovy, what's happening with Novo Nordisk is a completely different kind of kettle of fish to what we're seeing in terms of Novartis. GSK is doing absolutely nothing as well. Yeah. When we talk about the pharma sector here in Europe this morning, it is basically the effect that Novo Nordisk is having. Yeah. The H&M story, I think, is fascinating. I'm trying to understand. There is a miss here. So we've got an operating profit miss, which is reasonably substantial. But I'm just wondering if this is a reaction to Daniel Erver as CEO. The previous CEO is departing. She's leaving. She talks about the fact she's got mixed feelings. She's always struggled to get this business on track. We now got a guy that's coming in. He's been with the business for a long time. Is he going to really radically shake things up, or is this just going to be a continuation? And I'm wondering whether the market was looking for something else in terms of a change of strategy here, which it's now not going to get. Erver feels like it's a bit of a surprise, and the market is already maybe signaling its displeasure, maybe with the fact that we're not going to see something a little bit more radical coming through. Well, perhaps that might change, but I also wonder how radical you can be in this macroeconomic environment. How much can you really say, look, I'm really throwing my weight behind the consumer, I'm making these big changes at a time when there is still so much uncertainty about how much spending the consumer is actually going to do around the world, by the way. I think that's a fair point, but I think if you look at what is happening in the consumer space, you look at what is happening with Zara, you look at the investment that has been made, the ability of that business. You talked about it earlier. Zara is a classic, is a beautiful omni-channel business right now. You can buy stuff online. They know where their stock is. They have a really good connection between their online stock and their in-store stock. You can return stuff. The model works reasonably well. H&M's continued to struggle. It's got better at it, but it's yet really to deliver on the model thus far. And the previous CEO has clearly struggled with that. Are we going to see a radical departure? This guy runs the H&M brand within the group at the moment. Is he significantly going to change the strategy? Is he going to accelerate or take the business in a different direction? But the model is also fast fashion, right? It's you're designing, you're putting it on the floors, and then you're getting rid of it very, very quickly, which, again, appeals to a part of income that in a way that LVMH, for example, or Macy's, et cetera, does not. So that is the retail story. We're going to dive into that. We could go on and on talking about clothes. I know Guy loves this topic. My favorite subject. We're going to talk about the banks coming up next. Santander jumps after forecasting higher revenue, profitability for the year. We're going to dig into those deeper earnings and bring you more from our interview with Executive Chair Anna Botín next. All of that coming up. Stick with us. This is Bloomberg.
this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg. Context changes everything.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
Markets are betting the Bank of England will start to cut rates this year. But will BOE Governor Andrew Bailey tip his hand as to when?
Our job is to achieve the 2% inflation target sustainably. I'm encouraged by where we are, but we have got more to do to get to that target.
Tune in to Bloomberg for live coverage of the BOE decision and following press conference, plus expert analysis of what it all means to you. It all starts Thursday, right here on Bloomberg. Context changes everything.
21 minutes into the market session here in Europe, nothing is happening at an index level. You're going to have to wait for the Fed a little bit later on maybe to see some index action. But at the moment, basically, you've got a market that is fairly mixed. Single stocks are a different story. So there's lots going on with single stocks. You're actually seeing some fairly decent moves this morning. Novo Nordisk, of course, scaling new heights. What a shock. This as it becomes only the second ever European company to reach a market value of 500 billion. I'm assuming that LVMH, I think, was the other one. Red hot demand, of course, for its obesity drugs. Novartis shares, meanwhile, under a little bit of pressure. It's mixed. We spoke to the CEO a little bit earlier on. This is what Vas had to say.
We maintain our bolt-on M&A strategy. Last year, we did 15 deals totaling about $6 billion in total investments or divestitures. Deals like Chinook, which was a little over $3 billion. And we feel like doing those bolt-on M&As to strengthen our portfolio in our core therapeutic areas is the right way to build the growth story beyond 2028.
Dasha Afanasieva joins us now to discuss this. And we're going to talk about H&M as well, which I'm quite excited about. So let's start off with the pharmaceutical sector. First of all, there's no connection. You can't draw a connection this morning between Novo Nordisk, Novartis, and GSK. These are radically different businesses. Do we need, therefore, to just treat them as individual stocks? And what are the takeaways that we need to be watching?
I think we do, although one connection did just occur to me.
Excellent.
Supply chain constraints.
Right.
I think that is the common thread here, because Novartis shares slumped after its cancer treatment faced supply constraints, and that's been one of the problems in the quarter.
The prostate cancer. Yeah.
That's right.
Yeah.
And at Novo Nordisk, that's also been an issue. And Novo Nordisk has been investing heavily in expanding supply because of this crazy demand for its obesity and diabetes drugs. And this year it's planning to invest a further $6.5 billion in expanding.
So basically, Nova is just a capex. How quickly can we build our factories?
I think that's a big part of the issue. Then there's also the issue of competition, because we had
Lilly's
Lilly
coming in,
and then other companies are trying, smaller, lesser-known companies are trying to get in there too. There's a question about the patent cliff and when will generics of these drugs become available? How many years have these companies got? And finally, it's the issue of reimbursement. So how much of the cost of these drugs are governments going to pay for in various regions? And all of that determines how quickly today's number of 40 million people on these drugs, how quickly will that grow?
All right, Bloomberg's Dasha Afanasieva, we thank you so much. I mean, look, I'm obsessed with the healthcare space. Guy cares about retail. We've basically flipped personalities, apparently. Now we're going to talk about banks. Spain's biggest bank has reported fourth quarter results beating estimates. 5 million new customers helping the company lift income from lending. We spoke to Executive Chair Anna Botín.
We are very confident we can maintain a positive momentum in 24 across all our global businesses. And that is why we're increasing in profitability again in 24 to 16%, which is a very ambitious number, but in line with what we said at our Investor Day. So yes, it's not such a good scenario in general, but for us, it's going to be a better year.
Let's bring in Bloomberg's Tom Metcalf. He's been following the interview word for word. Your initial take on the Santander story at a time when European weakness seems to be the main theme.
Yeah, look, I think it's really interesting. Again, you sort of expect the net interest income to come down given where we are at the rate cycle. What was really sort of notable for Santander was their net interest income rose, not because of the rate rises, but because they actually brought in more customers. I think something like 5 million extra customers. Was Brazil a factor? It definitely helps, and I think that's what we're seeing is as you look at different European banks, you're seeing very different situations. So yesterday, BBVA net interest income basically fell slightly. Here, big old jump, and that's because different markets. And Santander would say, hey, we are operationally doing it right. We're bringing in customers. We're making the right service offerings, and that's helping our bottom line.
UBS. Of course we're going to see cuts. Of course we're going to... They're bringing two massive banks together. Of course we're going to see departures. Why is today a surprise?
No, it's just one of the many subsequent, changes we're expecting. And, I think what's interesting is it's the US investment bank at UBS. And the way I think of UBS is very different each region, right? Like Europe and Asia are a bit more closely aligned on the wealth management side. And then UBS almost has a sort of standalone investment banking operation in the US. So interesting there. That's where some of these cuts have happened. And yeah, as you say, I'm certainly expecting more to come as that big integration continues to take place.
All right, Tom Metcalf, we thank you so much walking us through some of that European bank story, again, at a time when we are seeing a lot in terms of, honestly, the European weakness. But how actually do you make up that net interest income? Coming up, we're going to go from the banks to the big tech story. Microsoft, Alphabet falling in late trading as earnings really satisfied those investors. What's at the heart of that story? Alex Webb joins us in just a few moments. Stick with us. This is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
This is Markets Today. We're about 30 minutes into the European trading day. Again, it's a mixed picture. I'm going to take Guy's line here. It is micro this morning. It's going to be macro later. You are seeing a little bit of a mixed picture when it comes to those European stock earnings. So let's dive right in and talk about one of your favorite stocks. Guy?
Absolutely, one of my favorite stocks. There is a big move this morning in Hennes & Mauritz. The stock is down. There is a miss in the numbers, which I think could be one factor behind that. But I think the bigger reason appears to be that we've got a surprise change. Daniel Erver is going to be the new CEO. Chloe Melly joins us now to discuss this. You've been covering the stock. Look, the numbers are a little off. So there's a reason to knock the stock down, but not down by 10% at one point, as I saw. So I'm assuming that this is the surprise on the CEO.
Yes. So surprise move with Daniel Erver taking over immediately. And the former CEO, the departing CEO, said she was stepping down with mixed feelings.
She never got to grips with this business. Helena really. Helmerson, did she?
Not really. She really struggled to kind of boost profitability during her tenure, and she was struggling with a few factors. So there was the pandemic, there was increasing competition with Zara, with Shein, and there was also really stubborningly high inventory levels that kept going through her tenure. And so now the new CEO is leading H&M brand. So there shouldn't be too much of a change in strategy, but there should be a focus on reducing those.
But the market clearly wanted somebody else.
Yeah.
Is that a signal I can take away? The market maybe wanted a change of strategy. This feels like a continuity candidate.
Yes, maybe they just wanted someone new, new, because under the former CEO, the market value, the H&M lost a fifth of its market value, so they just needed something different, I guess.
But let's zoom out here. How much of this is an H&M weakness story as opposed to a wider chain retail story? We have seen on both sides of the Atlantic this become a very common story. So how much kind of blame can you really give H&M when they're dealing with this kind of struggling macro environment?
Yeah. So they also missed fourth quarter profit estimates, and one of the things that they blamed it on was mild weather, hot weather in autumn throughout Europe, and that's a theme that comes up again and again. And Superdry last week mentioned it as well. So there's just a sort of, as you said, macro weakness here that they'll have to keep contending with. So hopefully they'll be able to get a new boost under this new CEO.
Yeah. All right. Bloomberg's Chloe Melly walking us through one of your biggest surprising stock moves this morning. I want to get back to the tech story, though. A whole lot of red on the tech stock board in after-hours trading. Microsoft, Alphabet, AMD, you name it. Bloomberg's Alex Webb is covering it. Alex, let's start off with some of these major moves. I don't even know where to begin because Guy and I have been talking about this. It has been looking pretty decent. These numbers are decent, but they're coming amid a background of A+++ results. Is the next quarter going to be more of a pain point for some of these big tech companies?
It's the challenge
that when expectations are so high, right? Microsoft's trading at 36 times its forward earnings at the moment. We're in this sort of strange territory where if they actually meet expectations, it's a miss, and just beating expectations is sort of meeting them, in a sense, if that makes any sense. Like, they need to blow people out of the water to really get the stock boost that investors are looking for. There's often a little bit of profit taking in these quarters when they see that numbers are fine, but not massively out of the realms of what had previously been expected. And so that's why, even as Microsoft posts the highest sales growth in since 2022, its stock is trading down.
Alex, what really surprises me is you listen to the earnings calls, you take a look at the transcripts. They were given opportunity to pick themselves up last night. They were given they were given the opportunity to sound much more positive about AI, and they didn't take that opportunity. Was this a deliberate strategy by some of these companies, do you think, just to manage expectations a little lower?
I mean, look, I can't possibly know what their inner thoughts are, but it would seem sensible to do that. You know, if we say that is the case, right, that that meeting expectations is actually a little bit disappointing. Well, therefore, if you're able to manage expectations down a little bit, it makes it easier to beat them, and therefore it kind of performs better in the subsequent quarters. That would seem like a sensible approach from an investor relations perspective. I don't know whether it's actually what they're doing. The thing is that you've got to sort of differentiate what we mean by the boost from AI here, because frankly, for Microsoft, it's primarily about their cloud business. We did see a 6 percentage point boost to their business attributable to AI, up from a 3 percentage point boost in the previous quarter. But this isn't the real money that's being made right now is not in, assistance in Microsoft Word, for instance, or Office across the board in those products. It's really people using some of the offerings from, say, OpenAI to build their own businesses and putting them in Microsoft's cloud in Azure. That's where the money is being made.
Well, Alex, to your point, though, when we talk about the AI kind of story and apply it to Alphabet, for example, we know Alphabet is far more cyclically exposed, far more advertising exposed, but they also have a cloud business that they're actively trying to grow to compete with the likes of Azure. Is there a read-through there, or is Google's business perhaps, or I should say Alphabet's business, a little too nascent to make that connection?
Well, the thing's interesting with Google is they do seem to be enjoying a little bit of a tailwind from AI in their cloud business, but it's that core business which still accounts for, the lion's share of revenue, the advertising business, which, as you say, very cyclically exposed to downturns. That was a slight miss from a revenue perspective in advertising. That's what investors seem to be punishing them for. Yes, there is some growth coming in AI, in the cloud business and potentially elsewhere, but for now, the lion's share of their business is not as rosy as investors would like, and that's the cash that's going to fund this other growth.
Alex, is there a read across to later on this week? Can I read anything across from what we've learned out of these numbers into what is going to happen with Meta, what's going to happen with Apple? Is the advertising business miss, which I thought was pretty small on Alphabet, going to be relevant for Meta? Is there anything in Apple in all of this? Apple seems to be a laggard in AI. It probably does need to big up its AI operations.
It'll be fascinating to see whether Meta is able to show a little bit more resilience than it has done in the past. You tend to think that Google is a place where brands have to advertise. If you're in the business of selling, for instance, white T-shirts, you need to be paying for AdWords, that when people search for white T-shirts on Google, your stuff is turning up. That is less the case with Meta's platforms, with Facebook, with Instagram. There was last year real growth in Chinese direct fast fashion brands, things like Shein, and they spent a lot of money, it seems, on Meta's platforms. That really drove some resilience at Meta. But the Chinese story is actually what is important at Apple. Are we seeing the big drop-offs that some seem to be expecting in unit sales in China? There's been a certain amount of pushback from the Chinese government in its state enterprises, saying that probably state-owned enterprises saying you probably shouldn't be using Apple devices. That in and of itself isn't such a big deal, but whether there's a knock-on effect to the Chinese market as a whole, there was a report this morning from a prominent analyst, or an Apple analyst, who seems to think that there could be a 30 to 40% drop-off in 2024 in China of iPhone sales. So that is really what investors are going to be looking out for Apple. Yep. What does the Chinese business look like?
Elon Musk has another problem with the same judge in Delaware. This time it concerns his pay and the board's relationship with setting his pay, or his relationship with setting his pay. How big a problem is this now for Musk? He's basically polling whether or not he should be moving the business and its incorporation to Texas. Is this going to have a material impact, do you think, on Tesla's ability to convince investors that they should park their money with it?
I think it's a big for Elon personally, right? His personal wealth gets affected by this. He's been making a lot of noise about needing to have more control at Tesla. You don't forget, he did sell a hefty chunk of his shares in order to fund his acquisition of Twitter. If he's not able to access these options, I think the implications maybe for his other businesses are more considerable, not least Twitter, which, it appears to be entering, more difficult financial territory than it was a few years ago. For Tesla itself, I think it's more the impact on Elon's approach to management. He's sort of been suggesting that he might walk away from Tesla. That seems to have been the subtext of some of the things he's saying. I find that very hard to believe will be the case. But if he is, having this pushback from Delaware, he's talked about moving Tesla's domicile to Texas. The operational effect on Tesla is more to do with what it means for Elon himself, how he's going to change his management as a consequence.
Bloomberg's Alex Webb, we thank you so much for walking us through those crucial stories. We're going to get more coverage on the technology stories, how they're reacting in the day after. Of course, Bloomberg Technology will be all over that. Ed Ludlow, Caroline Hyde over in the States will walk you through that story, I believe, coming up at 4 p.m. UK time, if I'm doing my math right there. But, Guy, I think what's really interesting about that Tesla story, as we macro this out, it's not just about Elon Musk getting a little bit of a raise. It's also a question about how he does that. There are stock options involved that then impact the way Tesla stock trades because of the margin, which then affects how the entire benchmark trades. And that's not even factoring the macro story, like what bonds might do.
This comes back to the portfolio risk. This comes back to you get some movement in Tesla. Tesla is one of the Mag 7. It can have a really big impact. A lot of people are heavily overweight this stock. It's a big portion of their portfolio. You start getting wobbles in Tesla, then you get a wobble in Microsoft, then you get a wobble in Alphabet.
Yeah.
The ripple effects of that can be really quite substantial.
Off of one man's pay and one man's decision, which is wild, and something that, by the way, has in the past created some ire over at the SEC, for example. We know that's an ongoing issue.
And in courtrooms as well.
Yeah.
This was the same judge that basically forced him to buy Twitter that then became X.
He's not doing well in terms of the fanfare in Delaware, is he?
Absolutely not. We need to talk about what's happening in the bond market. Probably should just reference that. We've seen some softish French CPI data today. You're getting a fairly substantial reaction to that, as you can see. We're basically off 7-8 basis points pretty much across the board. This, of course, going into the Fed a little bit later on, which could significantly change the narrative. What I think is interesting is the yields are basically back now to where we were at the beginning of this year. We saw a big shift in terms of what was happening with yields. That has now pretty much unwound. So the bid back firmly into the bond market.
Yeah.
But the Fed later on could obviously upend all of this.
Yeah, but there is a currency dislocation that I think isn't getting enough love. Off the CPI report that we saw coming out of France, this kind of deceleration, yes, it's creating this bid in the bond market, but take a look at Eurodollar. We're still at 108. Yes, euro weakness. That still seems very strange to me when the narrative is the ECB might front-run the Fed because of the weakness on the continent.
But there's another way of looking at it, which is that the ECB's got a stickier inflation problem and may therefore go later. Yes, inflation is coming down, but the ECB is making it very clear that it's watching wages. Therefore, one shouldn't assume, other than the French central bank, one shouldn't assume that we're going to see early rate cuts. So I think the jury is still out in terms of which central bank ultimately goes first. The macro picture would tell you it should be the ECB. But the inflation narrative kind of around the ECB, I think, is maybe a little bit more tricky.
Yeah, that's just the monetary story of it. We're talking about the markets as well. And then you have to keep in mind fiscal budgets, how geopolitics affects that as well. That's the piece that we're going to talk about right after this commercial break. Coming up, with the EU set to hold a special summit on Ukraine to discuss a 50 billion euro aid package. We're going to speak to President Vladimir Zelensky's economic advisor. That conversation next. Stick with us. This is Bloomberg.
invested more than $10 million in our employees over the past year, and we're going to continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and your work. I know I deal with that all the time. This is really a people-first company. Even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that this is something that many business leaders are focused on, and time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be, and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at a 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could. We've always taken what we should. We have to pay people more. We have been, and we'll continue to do so. We'll take a little bit of a margin compression on that as we've had to, and I think that's the right thing so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
Was going to keep Rain World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Markets Today. We are about 46 minutes into the European trading day. Green on the screen when you look at these equity markets, and also green on the screen when you look at these bond markets as well. A bid into both stocks and bonds is where we're at. But again, it's a sum of all parts trade. We've been talking about the corporate story this whole time, but we haven't talked about, ahead of the monetary policy story later today, of course, from the Federal Reserve, is the geopolitics, which absolutely feeds into the European bottom line. A key meeting on Ukraine's future tomorrow as the European Union holds a special summit to attempt to find agreement on a vital $50 billion euro aid package. All over the story is Bloomberg's Maria Tadeo joining us from Brussels. Maria, we've been here before. What changes this time around when it comes to Hungary and Viktor Orban?
Well, Kriti, what changes this time around and what has not changed this time around too? Because the Hungarian Prime Minister continues to say that he cannot agree to this 50 billion euro package for Ukraine as it stands. He has been saying, however, over the past few days that he could be open to it if he gets a review option. So every year he would check the way that the cash is being handed and possibly even a veto over it. What has changed, and this is relevant this time around and is very different to the meeting in December, which he also hijacked over the same issue, is that patience inside the European Council, so the EU 26, the rest of European leaders, is now wearing thin. Yesterday, a European official told us that the mood, frankly, is quite tense, that there has been a change from appeasing Orban to now saying you have to play hardball tactics with the Hungarian leader, almost this idea from European leaders that no matter what, tomorrow, with or without Viktor Orban, there needs to be a solution to this. The question is, how can you get him to play ball? And look, there's a number of things that have been floated. The idea of voting, perhaps stripping voting rights from Hungary, the idea perhaps of putting market pressure, economic pressure on the country to change its views. The problem with that is that it could feed into this populist line that this is a European Union blackmailing a democratically elected government. So it is complicated, and it comes down really to Viktor Orban. The latest, and we're told this morning, is that his diplomats, his Sherpas, his team, there's only so much they can do. This will come down to whether or not he feels tomorrow that he's got enough to give it a yes.
Critical summit coming up. We're looking forward to the coverage, Maria. Thank you very much indeed. Maria Tadeo joining us in Brussels in advance of that critical summit for Ukraine. Joining us now to give some perspective from the Ukrainian point of view is Alexander Rodnyansky, economic advisor to the president of Ukraine, Volodymyr Zelensky. Thank you very much indeed for your time this morning. The European Union is trying to figure out a way to get you the aid that you need. If it doesn't come quickly, what other options do you have?
Well, look, we are confident that eventually we will get the support needed. Obviously, this is a $50 billion package for Ukraine facility for 4 years. I think everybody knows how critical that is for our stability, for our macro-financial stability, for our war efforts that are obviously critical for the security of not just Ukraine, but Europe at large. So I think it will come through, although there are political hurdles, as we can see. Look, the other options are the ones that we're already using. We have internal financing. We collect taxes in Ukraine. That's more than 50% of our budget still. We have the option, of course, which is very bad in a critical situation with our central bank stepping in. That would be bad. Everybody knows how bad that would be for our macro financial stability, for inflation potentially. So that is really the method of last resort. But look, we will keep obviously fighting the war effort. There's no option for us, and we will try to finance our efforts and our economic system, or pay our pensions, our rents, everything that we have to cover any way that we can.
There is a split between the leading general and the president. And we are all watching to see how that split is going to develop. But there are concerns that it sends the wrong message to Western allies at a critical point, that there is not unanimity at the top of the leadership tree in Ukraine. And I'm wondering whether or not you are worried, whether others are worried in Ukraine, that this critical split could make it harder for Ukraine to get the support that it needs.
Look, I really wouldn't like to confirm or deny any rumors about splits or whatever appearances there might be and suspicions that people have from the outside. I think Ukraine is united in this existential battle against evil, against the full-scale invasion, and that's how it remains. Now, whether there's going to be changes and at some point, I really don't know, and I don't want to comment on this publicly. All I know is that Ukraine is united in its war efforts, and the generals as well as the president are united in this main purpose that we have right now.
Alexander, let's bring the conversation right back to the aid story, because it's not just European aid you're looking for, it's American aid as well, a lot of which, even in terms of defense resources, are wrapped up in kind of congressional politics in the United States. Alexander, how dire is that aid from the United States when we could be waiting for it for somewhere between 12 to 18 months? Can you withstand without it?
Well, we'll have to withstand, but as you say, it's critical, and there is, dire need for it. Our financing needs for this year are about 38 billion, 37.3 billion US dollars. Now, we have commitments from a few countries already, from Japan, Norway, United Kingdom. Those amount to about 4 billion. We're expected to get more aid from the IMF. That's about another 5 billion. And then obviously the US intends to provide us more aid, which is, I think, 11 or 12 billion USD. Now, all of that doesn't amount to the 38, and that's why the EU facility is also critical for us. So we do depend on our donors. We do depend on our international partners. And we want to remind everybody that this is a common battle that we're leading. We're not in this alone. This is about defending democracy, the Western civilization, the post-World War II peace order, if you want. So this is really not just about Ukraine.
Alexander, you said $12 billion is the intention from the United States. That is a President Biden agenda, which again may not last in about 12 months' time. Right now, the GOP frontrunner in the U.S. election is President Trump. How Trump-proof is your strategy?
Look, again, there's always different expectations and different things that you might anticipate from one or another president. We will work with anybody, and we accept, obviously, and respect the choice of the American people. We have already experienced the Trump presidency, and we came through it just fine. So who knows what will happen? Maybe Trump will actually scale up support for Ukraine. It's hard to speculate at this point. All we know is that we have to make ourselves more resilient when it comes to financing our needs, and that's what we're trying to do. We're trying to build capacity. There's a lot of fixed capital formation in the defense industry right now. It's being scaled up. There's a lot of groundwork that's being done, and actually quite successfully. So we're producing more and more equipment domestically in Ukraine. That's expected to continue, which is a sort of a trend that's continuing. And obviously, we're relying still on our partners and on the international aid that we're receiving, the military aid. And hopefully, and obviously, the expectation is that we'll continue independent of who is the U.S. president right now.
Alexander, final quick question. You mentioned the central bank option a little bit earlier on if the aid is not available, and the inflationary impact that would flow from that would obviously be fairly significant. If you go down that road, if aid does not arrive quickly enough, once that process starts to unfold, how difficult is it to get that genie back into the bottle?
Again, so we don't want to speculate because obviously none of that has set in. So far, all of this has been, as people say, off the equilibrium path. So these are all bad situations that could materialize but have never, because everybody understands that it will be critical for obviously Ukraine's survival and perhaps even and clearly for the security of Europe at large. But if you want to speculate or sort of draw out and model what would happen, then it wouldn't be good. Obviously, we would have to look for more internal resources of financing the deficit. That would mean either higher taxes, which is obviously damaging to the economy, or perhaps with a monetary authority, that is the central bank stepping up in terms of what it can do to help cover the budget. Now, that is something that has been observed historically in many countries. Unfortunately, it didn't have, obviously never has good results because it is inflationary. We didn't have to go that route, thankfully, yet, and hopefully we won't be. It won't be necessary to go through that route because it would raise inflation and it would be damaging to our war efforts and economy and macro-financial stability at large.
Alexander Rodniansky, we have to leave it there, but we thank you so much for making the time. He, of course, is the economic advisor to the president of Ukraine, joining us this morning talking about the aid and what that strategy looks like should it not actually arrive. And Guy, I think it's a really fascinating one because we don't necessarily talk about the geopolitics and the read-through not only into Ukraine's finances, but the EU's finances as well. It took a lot to find that $50 billion.
But it is a rounding error in terms of the big scheme of things, in terms of the scale and size of the European economy. I think we just need to kind of bear that in mind. This is a tiny proportion of the total size of the European economy. Look, we've got a busy day coming up. We've dealt with a lot of the corporate news.
Yeah.
We'll continue to see the reaction coming through, I think, with the US tech story later on. We're building up to the Fed. We've got CPI data coming out of Germany a little bit later on. We've got that Treasury refinancing coming through as well. The Fed's going to be important. I'm looking forward to seeing what Boeing has to say, but clearly this is all about the Fed this afternoon.
This is all about the Fed, but again, I'm curious what the focus actually is because we also have payrolls numbers coming up as well on Friday.
Yep.
And I'm curious what kind of forecast they give. And you asked the question about wages earlier to our European economist who had joined us this morning from Bank of America. Is wages still the focus for Jay Powell at a time when Anna Wong, our U.S. economist, says they usually don't cut when labor is doing just fine.
The labor market is doing just fine right now. That certainly seems to be the story. Look, we've got a lot coming up as well. Do not miss our interview with the CEO of Novo Nordisk. That's coming up in a few minutes' time, just after 9 as well. We've got some great coverage lined up coming out of the Fed as well. We've got a Fed Decides program a little bit later on. You've got it all covered. Stay tuned. Novo Nordisk CEO is coming up next. Stay tuned for that with Francine. This is Bloomberg.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything. And market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua in London with the conversations that matter, and here's what's coming up on today's program. Big tech falls flat. Alphabet and Microsoft drop as their numbers give investors a reason to take profits. Novo Nordisk shares higher, though, after the obesity drug maker says sales and profit will surge again this year. We'll speak to the chief executive in less than 20 minutes as it becomes the second ever European company to reach a market value of $500 billion. Plus, the world's biggest fortune is under threat as Elon Musk's pay package is voided by a judge. So we'll have plenty of more on those top stories, but let's also take a look at the European markets map. Now, as we were saying, if you look at some of these equities, they're down. I think the main focus will be on earnings from tech giants, and that, of course, fell short of Wall Street's very high expectations. Again, investors preparing for the first interest rate decision of the year from the Federal Reserve. If you break down some of the earnings that we've had in Europe, Novo Nordisk, once again, the only second European company to reach that market value of $500 billion. But I'm also looking at Henderson Moritz. So that stock, for example, down 10% after the retailer missed profit estimates. Its chief executive also said that they will step down. Investors roughly see a 40% chance that the Fed will lower rates for the first time in March. A lot of officials are saying that it's a little bit too soon to speculate on such a pivot. And you can see the shares here in Europe, I think they're either range-bound or actually not doing much, probably waiting for that impetus from the Fed. We also have some CPI numbers out of Germany. Now, for the moment, it's actually Brandenburg that's coming out with CPI figures for January rising some 3.7%. Bavaria, so there's a breakdown, and then we'll have Germany as a whole, that Bavaria CPI January actually coming in at 0.2. I think it's pretty much in line with expectations. And then NRW, January CPI rising 3%. Now, what that means for euro, you can see 108.27. Now, let's also turn to some of the big tech stories. Microsoft and Alphabet earnings disappointed investors, despite the companies working hard to weave artificial intelligence into their products. Well, joining us now is Bloomberg's Alex Webb. Alex, good morning, first of all, but what exactly happened at these companies?
They actually posted numbers that in some ways beat expectations, but the problem right now is that they're not blowing expectations out of the water. Then there is, as you suggested earlier, a little bit of profit taking. The Microsoft's trading is something like 36% its forward earnings. So even as there was growth from AI, that is mostly in the cloud. You're not really seeing the adoption of AI tools necessarily from its consumers. It's people taking OpenAI's products, for instance, and building them on Microsoft Azure. That gave them a 6 percentage point tailwind. Google, they also saw some benefit from AI. Their cloud business is profitable, marking the first full year that they have been profitable. But the core business, which is online advertising and still accounts for the lion's share revenue and profit, that slightly missed expectations. And of course, the cash flows from that business are often what's going to be funding the expansion into AI, and why you've seen a little bit of pullback from investors.
Alex, talk to me also about Elon Musk. So there was this pretty extraordinary also vent from Elon Musk after a judge said that his pay package of $55 billion was actually void. The billionaire then took to social media and said, never incorporate your company in the state of Delaware. What does that mean actually for Tesla? Does he move to another state?
Well, some of the commentary we've seen around this, he has suggested that he might reincorporate in Texas. He's incorporated Twitter, I think, in Nevada. Some of these states, critics will say, don't offer the same sort of protections to investors that Delaware does. And people on the opposite side of the fence from Elon Musk might say, actually, this is Delaware doing its job properly and ensuring that investors are not being, that the company is acting in the best interest of all investors and not a select few. The $55 billion payout, essentially, that was in form of stock that Musk got, was deemed to be something that wasn't in the interest of all shareholders. And that's why you've seen a certain reaction now from Musk himself.
All right, Alex, thanks so much. Alex Webb there with the very latest, of course, on some of these tech stocks or tech stories. Now let's bring in our first guest, Alex Brazier, Managing Director and Deputy Head of the BlackRock Investment Institute, former Executive Director of Financial Stability, Strategy and Risk at the Bank of England. We always like to put that title in there, Alex, because you're going to look into your crystal ball and tell us exactly what central banks are thinking right now. When you look at markets going forward, how much of it will be earnings and how much of it is it, once again, just monetary policy?
Well, I think actually it's a bit of both. So as of December, the Fed gave the green light to markets, really, that it wasn't going to react to a loosening of financial conditions and try and offset it. And that's been behind, I think, much of the pickup since December in the S&P. But now we're seeing a bit more focus on earnings as well. And I think what's really interesting is that even though earnings have been reasonably resilient overall, we're seeing quite a lot of dispersion, even within the Magnificent Seven. And for us, this is an environment where actually selection is more rewarded than it used to be in the past. This isn't a sort of macro environment in which the rising tide lifts all boats.
So why is that? And actually, how, again, is this because the environment, especially on the use of AI, is very much how the chief executive or management team apply to it?
Yeah, companies far outside the tech, from being about chips originally, to being about the producers of the AI technology, to actually ultimately being about which companies far outside the technology sector can actually implement AI solutions to gain a competitive edge. And that's really, again, where careful selection comes into play.
So, Alex, is it in the next 12 months that we find out? I mean, I know you don't, talk specifically about stocks, but the general idea is that if you look at some of the valuations, they probably won't stay at $2 trillion. They're either go to $5 trillion or actually go down.
I think we could see quite a lot of move over the next year, actually. And, right now, because the Fed's given this green light to financial conditions, and we'll see what they say later, we're overweight broad US stocks. But actually within that, this tilt towards AI-related exposures is more important. And as we go through the year, we could get a more complex environment because it's likely that central banks will be a bit more cautious in reducing rates than markets are currently pricing. And it's clear that we're not really going back to how things used to be. Rates aren't going back to kind of great moderation levels.
Which the market is not pricing in yet.
Not yet. I think it's pricing quite a few cuts this year still, though. And, it'd be interesting to see from the Fed in particular later, does it stick with its view that maybe 3 cuts this year looks about right? In our view, that looks about right. Or does the market stick with its view that something closer to 6 is about right?
Alex, where do you see the biggest mismatch? So when you look, I guess, at market expectations, but also how difficult it was, and I think I remember joking around with you, that there was no landing, flat landing for the U.S. last time. It was all over the place.
Yeah.
Does that give you, are you worried that actually this year we're just too optimistic about the U.S.?
Well, I think actually U.S. growth has been very strong in the second half of the year, and we don't really see a sign of that slowing very sharply imminently. I think that the 2 big things to watch later in the year are, one, the U.S. consumer. What happens when those pandemic savings are close to being exhausted? But also, as rates come down, what do we learn about the so-called neutral rate? It's really remarkable how resilient the U.S. economy has been to interest rates at these levels. And that tells us, on one hand, it's good news, but on the other hand, it tells us that rates are going to be higher for quite a long time, just to keep the economy on an even keel and avoid resurgent inflation.
The concern, I guess, is that we talk so much about monetary policy without understanding the underlying inflation number, right? I mean, monetary policy is a reaction to how much that does. Are you expecting inflation to, really to be on a trend downwards for a longer time, or is there a worry that in the second half it goes back up?
Well, not in the second half, but I think we do still have something of a worry that it roller coasters back up early in 2025. So things are on track now to get to very close to 2 later this year. I mean, on a sequential basis, US inflation is already at 2. So we're kind of there. I think, though, that you've got to remember that the inflation now is being dragged down by falling goods prices. Right. And that is, to coin a phrase, transitory. just as the run-up in goods prices was as well. And so looking ahead, it's really all going to be about wage growth and services inflation. And something has to change there. It could change, but wage growth has to come down from its current rates. And the jobs data we saw yesterday, the vacancies data, suggests the labour market does still remain pretty tight.
And we'll talk about the Bank of England and the ECB shortly, but how much of this inflation falling is due to central bank engineering?
Well, on the face of it, not a great deal, because it's to do with energy prices, food prices, and goods prices coming off their peaks. But I think without central banks having raised rates, inflation would, of course, still be a lot higher. Growth would have been even stronger, and we'd have seen even more underlying pressure.
Okay, Alex, thanks so much. Alex Brazier there from BlackRock Investment Institute stays with us, and we'll talk a lot more about the Bank of England and the ECB. So coming up, investors looking ahead to the Fed later today. Rate projections, of course, in the spotlight. We'll have also Decision Day preview for you next. This is Bloomberg.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West, only on Bloomberg Television. Context changes everything.
Look at Paramount Global. It's up some 21.5% actually pre-market. Now this is after Bloomberg has learned that media mogul Byron Allen has made a $14.3 billion offer to buy all of the outstanding shares of Paramount Global. Now in terms of what this means, we could see other offers coming in. I know we've been speaking to our team, of course, who've been covering that very, very closely. Paramount, of course, one of the crown jewels in a global media empire that's really controlled by the Redstone family, and it would be a tough deal to complete. This is according to a lot of insiders. If you look at what the company generated, it was some, operating income of $1.8 billion in the first 9 months of last year. Let's also, I guess, take this opportunity to look at pre-market for some of the tech stocks that we've been covering with our Alex Webb, Microsoft, Alphabet, and AMD. Now, they have struggled somewhat to meet AI expectations. That's actually a 2-year yield, which I'm sure Microsoft chief executive looks at on a daily basis. But this is pre-market Alphabet. You can see ex-Google still struggling to call it Alphabet, down 5%, AMD down 6.4% pre-market. Now, still with us, Alex Brazier from BlackRock Investment Institute. Alex, thank you so much for sticking around. We're talking about the Fed. We're talking about some of the monetary policy, I guess, conundrums. As an investor, you look at the worries you have around the world, and you think geopolitics, Middle East, oil, you have elections that are difficult to predict. Like, what's the blueprint of assessing some of the risks?
Well, I think for elections, of which there are many this year, actually it's a case of getting very granular, looking at the very specific policies as we learn more through the year, and thinking about how they will affect at a pretty granular level, at the sector level, at the industry level. What we're not looking at here is just who's going to win, and what's the big picture impact of that? You've got to get pretty granular about it. I think on geopolitics, this is obviously coming to the fore now. We're in a very different environment. We've had 30 years of geopolitical integration, driving down inflation, meaning central banks were constantly trying to stoke inflation up. Now we're kind of turning that on its head.
When you look at Bank of England, I mean, a lot of people think that they're really behind the curve, but they're also just looking at the data and I guess trying to take that into account. What do you think they'll do for the rest of the year?
Well, I think they too, like the Fed, will cut rates a bit this year, but I do think they'll be cautious because made really good progress on inflation in many respects, but still they've got two things probably nagging at them. One is that wage growth, as far as we know, given the data available, hasn't yet come down really decisively. So while it stays at these levels, inflation isn't set to come to 2 sustainably. And the other, though, that there is a real puzzle really for the UK is that even though the economy hasn't grown very much for a few years now under the weight of that policy tightening, actually, we don't have any spare capacity in the economy. We've had weak productivity growth, weak labour supply growth. So a big challenge for the bank is figuring out what's going to happen to that from here. Because if that doesn't pick up, then actually the bank needs to continue to weigh on UK activity just to stop resurgent inflation.
But Alex, very quickly, are we underestimating the fact that central banks don't want to reverse course, right? So they'll only cut when they're ready because otherwise it really touches their credibility if then they have to do a U-turn.
I think that's right. They're trying a very careful balancing act here, but on balance, I think they'll err on the side of not wanting to reverse again.
Alex, thank you so much. As always, Alex Brazier, their Managing Director and Deputy Head of the BlackRock Investment Institute. Now, coming up, our interview with the Chief Executive of Europe's most valuable company, Novo Nordisk, on why it sees profits surging again, despite higher competition. That's next, and this is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Bloomberg News
News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Now let's have a look at shares in H&M plunging as the fast fashion pioneer's profit fell short of estimates. Now a surprise change of chief executive also surprised investors hitting shares. Now some of the other stocks we're watching, look at Novartis. Shares slumping after the drug maker reported earnings that came short of analyst estimates on weak revenue from Pluvicto. This is a cancer treatment that actually faced supply constraints. And then Universal Music Group has accused ByteDance TikTok of offering unfair terms and resorting to intimidation in talks to extend a licensing agreement for artists. Now, the Chinese-owned firm actually responded by saying that Universal put greed above the interests of artists and songwriters. And then Elon Musk's $55 billion pay package at Tesla was struck down by a Delaware judge after a shareholder challenged it as excessive. Now, the ruling would be a giant bite out of Musk's wealth and put the fate of his companies in question if it survives a likely appeal. The other stock we're watching out for is Apple pre-market. Influential technology analyst Ming-Chu Kuo has warned that Apple is expecting lower demand for iPhones this year. Now, he wrote in a report that the tech giant lowered its 2024 iPhone shipment of key semiconductors components to about 200 million units. Meanwhile, Epic Games has told a judge that Apple has not properly complied with a court order to open its App Store to allow outside payment options weeks after its bid to resist those changes hit a dead end. Now, the stock of the hour, Novo Nordisk, shares higher after the company said sales and profit will surge again this year. Now, the Danish firm continues to roll out its blockbuster anti-obesity drug, Wegovy. Sales have been held back by supply constraints, and the firm is now facing competition in the anti-obesity segment from rivals like Eli Lilly. Now, Novo Nordisk's chief executive, Lars Fruergaard Jorgensen, joins us now. Sir, thank you so much for joining us. A lot of talk, of course, about whether you'll have enough capacity to satisfy the world's demand for Wegovy, Ozempic, and your other weight loss drugs. How much are you expecting CapEx to grow in the near term to make up for this demand?
Yeah, thank you for having me here, Francine. We are really excited about the opportunity, as you say, and as we see a continued strong demand for our products, we'll be ramping up capacity, and we are, more or less doubling our spend on CapEx this year compared to last year. In 23, we announced 75 billion Danish kroner of expansion plans. So we are scaling, and that's you can see from our increased guidance for this year and the fact that we now bring more starter doses into the US. So we see more and more products coming in, and we'll be investing to produce even more for the future.
Can you also give us a specific update on Europe? I know some of the supply is quite restricted in Europe. You've launched Wegovy in 6 European countries so far. Supplies have been very difficult to get hold of. Is this the year where Europe gets more?
Yes, so we see that the very steep uptake is not just a U.S. phenomenon. It happens in Europe as well. So just like in the U.S., where we have had some restricted number of starter doses, we'll try also in the in Europe to make sure that patients can have a good experience when they start on our products. So as we this year will be launching in more European markets, it will be with as a set volume and ways to make sure that those who start on treatment can also to the best of our ability, make sure that they can continue getting products. So this, we believe, is a responsible way to serve patients, and that will be the model we'll be going forward with.
And you, sir, are very confident that you'll actually be able to keep up with momentum, given the introduction from Zepbound by Eli Lilly in the U.S. I know you were talking about some of the starter doses. If you look at, you're looking to double that amount in the U.S., will you continue to boost supply through the first quarter?
Yeah, we have guided that we are more than doubling the starter doses in the US, and we started that here in January. So that still have to be seen in the script data in the US. So you can say that's a sign that we have significant more products coming to the market also in the US. And if you look at it, we have access to some 50 million patients in the US, and we are only serving a small fraction of that. So there's ample opportunity for competition, and this is really about growing the market, serving more patients, than it's a matter of market share.
So you're not worried about competition?
No, I'm not. We have huge respect for our competitor. We have been competing against each other for 100 years, and each and every year making sure that we drive better and better outcome for patients and helping healthcare systems that are burdened by chronic diseases. So that's what we're aiming at, and I'm quite confident that we can sustain our growth also with competition in the market.
Are you overly worried about investor expectations at all, given actually the company just broke out of the $500 billion mark?
It's clear when you grow to our size, there's a lot at stake. We are a focused company. We have perhaps a small exposure on therapy area and less product variation than most. So we're a really focused company, and we believe we have the capabilities to both stay innovative, build our pipeline of next generation products, but also ramp capacity to serve a larger part of this tremendous opportunity. And I have 60,000 good colleagues, more and more of those to help me do that. So I'm quite positive about the outlook and our opportunity to drive health and get to many more patients.
Thank you so much for your time today. As always, Lars Frøgaard Jørgensen, there, the chief executive of Novo Nordisk, speaking to us on the back of this pretty impressive results. Coming up, the U.S. President Joe Biden says he's decided how to respond to an attack by Iranian-backed militants that killed 3 American troops in the Middle East. So we talk geopolitics next, and this is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Big tech falls flat. Alphabet and Microsoft drop in pre-market trading as their numbers give investors a reason to take profit. Novo Nordisk shares higher after the obesity drug makers say sales and profit will surge again this year. Plus, the world's biggest fortune is under threat as Elon Musk's pay package is voided by a judge. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So U.S. President Joe Biden says he's made a decision on how to respond to an attack by Iranian-backed militants that killed 3 American troops in the Middle East, although he did not reveal his plans as he spoke to reporters yesterday.
Do hold them responsible in the sense that they're supplying the weapons to the people who did it. I don't think we need a wider war in the Middle East. That's not what I'm looking for.
Well, joining us now, Tina Fordham, geopolitical strategist and founder of Fordham Global Foresight, and Leslie Vinjamuri, director of the U.S. and Americas program at Chatham House. I've been looking forward to this panel, frankly, for the last week to try and make some sense of exactly what we're living through. Tina, when you look at the big geopolitics, so thank you both, first of all, for joining us. When you look at some of the big geopolitics and really, the concern that Joe Biden has to calibrate his response, maybe to send a message, but not go too hard or this escalates. Like, is this your main worry right now?
It's the biggest short-term worry for markets, certainly, and for the Biden administration. I mean, Joe Biden is between a rock and a hard place. The lack of market reaction is kind of out of kilter with the fact that this is the biggest attack and the only attack killing U.S. troops in quite some time. So Biden does need to respond. General Stavridis said as much. He needs to hit back hard, but without triggering a full-scale confrontation with Iran.
Leslie, I mean, the concern, and I've heard both sides, right? So, some people saying, well, look, the U.S. has to go harder. They have to be more engaged in foreign policy, which is hard probably in an election year. But also I've heard that the U.S. can't really handle, their involvement in Ukraine, their involvement in the Middle East, or just trying to do too much.
Well, I think that there's a general concern to bring the level down, to introduce some stability. And so it's less a problem of, is there enough resource to respond to Iran, but is there the bandwidth to deliver the stability that's needed, both domestically. Remember, this is a president that's under a lot of pressure at home. He's being pushed by Republicans, certainly in the House, to take a much stronger response. But he is a president who, by instinct, by history, by experience, really thinks about the need to exercise restraint. The problem here, of course, is that broader objective of stability is very difficult to achieve absent some sort of resolution to the war between Israel and Hamas. That's the real problem. Without that resolution, without some sense of a path towards a two-state solution, something that seems very far off in the distant future, it's hard to see how you get Iran to bring the temperature down, even with a harder response. Those things are fundamentally linked.
Do you think there's anything that the White House and actually Antony Blinken can do now, the Secretary of State, to try and de-escalate Hamas and Israel, and certainly try to limit the casualties in Gaza so that the world doesn't turn against them?
Yeah, I mean, I think the real question, for many people is to see whether or not the Biden administration will take clearer steps, harder measures to calling Israel to exercise restraint, whether it's supporting a ceasefire at the UN or, more importantly, holding back on delivering that military assistance to Israel, which, has been in steady supply. Very difficult for this president to do, a tough decision. There's a lot of pressure, not only globally on him to do that, but within the United States. But so far, we haven't seen that movement. We, of course, don't know what's being said behind the scenes, and we know that there's been a very concerted, very serious effort at diplomacy across multiple individuals, Blinken, Burns, of course. So I think we're waiting to see whether the U.S. will make that call. But even if it does, it's not obvious that Israel will then won't continue its campaign.
And Tina, you were mentioning the fact that markets are largely like they're not taking notice. Is that they just don't know what to do with it, because I guess the probability of this escalating is just so awful that they don't really know what scenarios they're looking at. Is that fair, or am I being too kind to markets?
I don't think market participants think that the probability of escalation is high, and I'll tell you why. Traders, at least, tend to take a pretty instrumental view of foreign policy, and there are two factors at play. One is that there's ample supply, and no one expects a confrontation that would interrupt gas supplies, right? And the other point is they look at upcoming U.S. elections and think Biden won't do anything that will drive up oil prices. On this, I think that they are far too complacent, and I've reinforced that message, because once the genie is out of the bottle, and it definitely is, it's very difficult to sort of monitor and contain these responses.
But does Iran want to get more involved? I mean, it's unclear, actually, to me, what Iran is playing at right now.
So we tend to over-interpret strategy. This is an excellent time when there's a conflict in the Middle East, very unpopular Israeli operations in Gaza. Excellent time, and we're seeing this with the Houthis, obviously, with the Iran-backed militias in Iraq, which are the ones that undertook this attack. Great time to gain advantage, to undermine U.S. and allied positions, and to claim they're doing this in response to the attacks on Gaza. This is not an environment that lends itself to de-escalation, which is why I think we should be preparing for more and not less.
Does the America? We're in an election year, so I think everything is probably through that lens, right?
Yeah.
Does the U.S. voter vote on this? Like when they tick the box on who their president is, do they think about foreign policy?
We know that they don't. We know that domestic concerns will matter. It's the economy. It's your particular experience of inflation, or the basket of goods that you are spending your money on. Is it coming down? However, and it's very hard to get at this in polling, but there's no doubt that sense of stability affects how people vote. They might, if you run your data, it's the price of gas, or it's the price of groceries, price of your mortgage. But of course, hovering in the background is, do I live in a stable country? Do I live in a stable world? Is the rule of law operating? It filters through, and I think, this president knows that. Donald Trump, interestingly, has sort of played off of the disruption. It's almost like he sort of rejects the idea that people like that basis of stability, and that they like a sense of drama and disruption. But I think we don't have the measure for it, but it's certainly there.
I mean, I know we're like January 31st, so it's early days, and anything can happen. But is there any chance that Donald Trump is not the Republican nominee?
There's certainly a chance that it's a very long time before the party conferences and the elections. I think that Haley right now looks like she's sort of casting a spotlight on the fact that Trump's numbers aren't what they should be for somebody who is in effect the incumbent of the Republican Party. The fact that he's not getting much over 50% of the vote in a Republican caucus and primary is not a great sign for him. He probably will get the nomination. We certainly don't want to, influence the elections by preempting the outcome. Anything could happen. But even if he gets the nomination, this is a man who has, as we know, 91 criminal charges, a lot of uncertainty, a lot of personal volatility. And so, where we land in November is very, very far from certain, let alone what the outcome of the election is.
And Tina, I mean, I guess if you look, I think there's like 50% of world GDP going to the vote. The U.S. is probably the one where repercussions will be felt most around the world, but actually there are other big countries, right, that could change the way we look at 2025.
Yes, with so many elections happening, you know, yay democracy, that should be something that is welcomed. But there are geostrategic elections, like we saw in Taiwan, for example. Still waiting to see how Beijing responds to that outcome. The elections in Russia aren't real elections, but they do matter for President Putin. There are big economies going to vote, like India. Almost no chance of a change in power, but what does Modi do with a reinforced mandate? Indonesia, also a big powerhouse. South Africa, where pre-election politics arguably played into its decision to take that case to the ICJ. So there's no uniform trend in global elections. But at the moment, if you know, when I look at the analysis, most people are just saying, gosh, there are lots of elections. And lots of potential for volatility. How do people vote in the first big cycle post-COVID in light of inflation? As Leslie said, people's personal kind of experience of the economy. Yes, it's in America, it's about gas prices, but also it's very much filtered through their lens of you know, their political tribe, as it were. And of course, we have European parliamentary elections. Maybe the most boring elections this year, apart from UK elections, which personally I'm grateful that our elections are likely to be, you know, a bit short on drama. But European parliamentary elections will set the stage for the sort of the next set of actors, and we'll see how European populism plays out.
I like that. You know, short of drama is kind of like a sweet spot, I think, if you're a geopolitical analyst. Very quickly, Leslie, if Donald Trump becomes president, what does he do? I mean, the biggest foreign policy change would be what his take on Taiwan, or?
I think that, you know, there's two things really, and I do. We want to talk about foreign policy, but the reality is this is a president who will have the most significant impact if he's reelected on America's democracy, and we need to look no further than Project 2025, Schedule F, and the big plan, which is to take what he sees as the deep state, the permanent, you know, the civil servants, and turn them into temporary employees that basically serve at the will of the president. That's a radical shift for America's democracy, and that's really where the game is. He's also somebody who we know doesn't believe in multilateralism, really has disdain for some of America's closest partners and allies. And so I think that question, you know, for Europe especially, what happens to America's commitment to Ukraine, something that will be, you know, a question regardless, but a much more significant question. What happens to the U.S. enthusiasm for Vladimir Putin, that will, you know, increase dramatically if President Trump were to be reelected. And what happens to America's commitment more generally to Europe's security? Those are really big questions. And remember, we have an election here in the UK. That's going to be very significant. The proximity of the U.S. election to the UK election is, you know, arguably one of the most interesting and, again, hard to quantify things. But there won't be, you know, this. We don't live in a vacuum. We live in a world where people watch their television screens. And they'll be looking to see, you know, which one comes first, and what is the impact of perhaps a Labor government and a re-election of President Biden. We shall see.
Yeah, we don't live in a vacuum. I mean, that's true. So true. Leslie Vinjamuri and Tina Fordham both stay with us coming up, but we talk actually about Ukraine and Vladimir Putin, Ukraine's allies, Stalin providing vital aid as Russia wears down the country's defenses. So we'll also speak to Ukraine's presidential advisor, or we'll hear from him. That's next, and this is Bloomberg.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
You were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
The European Union will hold a special summit on Ukraine tomorrow as it tries to find agreement on a vital €50 billion aid package. Now, Alexander Rodinyansky, the economic advisor to President Zelensky, spoke to Bloomberg a little earlier.
Eventually, we will get the support needed. Obviously, this is a $50 billion package for Ukraine facility for 4 years. I think everybody knows how critical that is for our stability, for our macro-financial stability, for our war efforts that are obviously critical for the security of not just Ukraine, but Europe at large. So I think it will come through, although there are political hurdles, as we can see.
That was Alexander Rodinyansky, the economic advisor to Ukraine's President Zelensky. Now, still with us, Tina Fordham from Fordham Global Foresight and Leslie Vinter-Murray from Chatham House. Leslie, I mean, I was in Davos, and actually, so President Zelensky showed up, and he was in the corridors, and there was something a little bit sad in the fact that they really felt the need that they needed to, you know, show up, speak to investors, speak to the media to make sure that Ukraine was not forgotten. Is there a real danger that it's starting to be forgotten because of money and because of political will?
Well, and because of the war in the Middle East. I mean, as you well know, to be very clear, this is, since October 7th, the world's attention kind of moved further east. And it, you know, necessarily, and there is a thing, you know, in any major conflict that the longer it goes on without any sense of a clear resolution, you know, most especially on the ground, that you lose a little bit of that sense of urgency. You certainly lose public opinion and public support. And right now we're in a context where we're losing the domestic electorate because of the shenanigans of a small number of, you know, far-right radical Republicans in the House that are capturing what is otherwise actually broad support across the Senate and the House for supporting Ukraine. And that is actually, in a U.S. context, making it very difficult. We're seeing that this bill that's supposed to link border security support for Ukraine, Israel, Taiwan is you know, not getting traction. It's made worse by the New Hampshire result because Donald Trump is in the background saying, actually, I don't want border security because I want the border to be bad because that plays to my favor and it undermines support for President Biden. So the domestic politics are very small in the U.S. And they're pulling, I think, that focus away from a really urgent moment, clearly, for Ukrainians, and let's be honest, for all of Europe, and eventually for the United States too. If it doesn't, you know, if we don't support Ukraine, if there's not some sort of stability in the region, then this is going to affect clearly everybody.
Tina, we also have this EU special summit tomorrow, and this is about basically the EU trying to get Viktor Orban on side with a number of things that they will propose. Do you think they'll manage?
Viktor Orban will play this for as much as he can get. I think Viktor Orban and Tayyip Erdogan are both very skilled at this kind of horse trading. The pressure on Orban is getting higher than it has been in the past, but Orban has been the sole holdout in increasing EU aid and support, well, Slovakia as well, I guess, to Ukraine. But when you take the European dynamics and put them next to the U.S. political dynamics, what you see is a lot of political actors pretty cynically using the war in Ukraine for their own short-term benefit. And, you know, you could argue that's politics as usual, but it's not in the self-interest of either the European Union or the United States to allow, you know, the invasion of sovereign countries and the seizure of territory in a world where 85% of conflicts are over territory.
Yeah, but so I guess where does this end? How long is this just a war of attrition, and are we stuck like this for years, or does it?
Well, let's put it this way: we've talked about the Middle East, we're talking about Ukraine, we've talked about U.S. elections. Why would Netanyahu listen to the Biden administration if he thinks that Trump is going to be back in the White House? And likewise, why would Putin make any meaningful concessions on a diplomatic agreement if he thinks there's a chance that he'll be dealing with Trump again? And that's where, even though Americans haven't historically voted on foreign policy, this simple signpost of U.S. elections in November is weighing on all of these decisions.
Okay, thank you both for joining us. Tina Fordham there, geopolitical strategist and founder at Fordham Global Foresight, and Leslie Vinjamuri, director of the U.S. Americas program at Chatham House. Coming up, more of our interview, the Santander Chief Executive Chair, Anna Butin, after the bank added 5 million customers last year. That's bucking the trend across the industry. This is Bloomberg.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg.
We are very confident we can maintain a positive momentum in 24 across all our global businesses. And that is why we're increasing in profitability again in 24 to 16%, which is a very ambitious number, but in line with what we said at our Investor Day. So yes, it's not such a good scenario in general, but for us, it's going to be a better year.
Well, Santander's executive chair, Ana Botín, there after the Spanish lender actually beat estimates in the fourth quarter. Now, European bank stocks often trade at big discounts to book value. Maybe not big, just big. Consolidation could help, but companies need more flexibility when valuing the assets of a target when closing a deal. Well, that's the view of our Paul Davies, our columnist for banking and finance at Bloomberg Opinion. Paul, great to have you on the program. I mean, when you look at rules into this, I mean, I love the fact that everybody just cares suddenly about like merger accounting and things like that. But is M&A going to be back?
Well, there are a lot of hurdles in the way of getting deals done, but one of the things that people seem to want to talk about a lot more and have a debate on is the effect of accounting rules when you do a deal. And I think the reason why they suddenly want to talk about this is because they've seen a solution happen in the UBS Credit Suisse takeover. So, I mean, even though that was an emergency deal, there was this kind of regulatory forbearance, this kind of capital forgiveness in terms of some of the the value adjustments that you have to make when you buy a big bank like that, and that helped a lot.
But did it help because it was in a crisis? So if a Deutsche Bank were, I mean, I'm completely speculating, but let's say one German bank wants to buy a French one or things like that. I mean, are regulators supportive of that?
Well, I don't know exactly. I mean, certainly in the UBS Credit Suisse case, the fact that it was a crisis, helped massively. It certainly made regulators more accepting of potential solutions, I think. But what they did, there's no reason why it has to be a crisis-only tool. It's a kind of a very sensible approach to, the idea is when you buy a kind of a long-term fixed-rate asset, you have to mark it to its current market value, like bonds, but in this case it would be mortgages. But that if you hold those mortgages, if they're very high quality, you're likely to see them pay off in full. So it's a matter of time before the valuation comes back. So there's a kind of there's a capital effect of that, which you could easily forgive.
When you look at European banks, I mean, how do bonuses compare to the U.S.? This is usually, I mean, we're starting to be February. This is usually the focus of a lot of the employees, but also shareholders.
Well, I think what we've seen in the US and Europe is banks being probably more disciplined than we might have expected. There was a lot of talk late last year about, pay for potential rather than pay for actual performance. It was a very tough year for lots of people last year in terms of getting, deals done, certainly in M&A and capital raising and that sort of thing. And in fact, what we've seen is, I think, a lot of kind of bonus payments coming in, maybe lower than we might have expected. And, the overall cost of it, anyway, obviously there's a lot of variation for individuals, but the overall cost coming in kind of in a more disciplined way than we might have expected.
So, Paul, very quickly, what are you going to spend most of your next 3 months writing about? Is it like succession plans at big banks? Is it, potential M&A? Is it just like IPOs, pipelines?
So I think we're going to be looking for activity in investment banking. I've got a sense it's going to be a very stop-start sort of a year. There's an awful lot of things that could kind of, knock confidence again very quickly, although there's a lot of kind of pent-up activity waiting to happen. Succession, interesting. We had, some changes at Goldman Sachs yesterday with Jim Esposito stepping back. We have a new lead director there. That looks like Solomon is very much the CEO, very much kind of ensconced. And then JP Morgan's the other fascinating succession story.
Paul, thank you so much. As always, Paul Davies there, our columnist for banking and finance at Bloomberg Opinion. This is Bloomberg.
Looking at your portfolio of businesses, it is about resilience, it's about pressure, it's about women. How does that come together how does it manifest in the deals that you're doing now?
Yeah, it's one of the things that I became increasingly passionate about after
after I retired, was acknowledging the fact that focus and this performance mindset was a huge asset that I had gained and that I had worked on and perfected for over 20 years. And now working through brands and founders, I just recently announced a collaboration with the Amman Hotel Group where I bring in the best talents in sports recovery and performance mindset in retreats and offering it there to their clientele. Our first one is actually in Phuket in February. So working through what that means, I mean, if you see the stats of Fortune 500 female CEOs, 80% of those women have played sport competitively through their life journey. And all those skill sets that they've built, to me, they were part of this first chapter, right? But how do they now apply to everything else I'm doing? And I'm so curious and interested in how I can bring that to the audience now and make it more mainstream and accessible.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
Good morning from our world headquarters in New York. I'm Manus Cranny. Welcome to Bloomberg Brief. Let's set your agenda. Tech disappoints. Results from AI stars Microsoft and Alphabet and AMD leave investors underwhelmed. Novo Nordisk reaches a market value of $500 billion. The obesity drug maker says sales and profit will surge again this year. And countdown to the Fed, the central bank is expected to stay on hold today and avoid signaling any imminent rate cuts. A very good morning to you. Bullishness is like an ego. It's easy to fracture and easily wounded. And that is exactly what happened in the past 12 hours. You had the results from AMD. Have a look at that. Down 7% after hours, crashing lower this morning. Alphabet down another 5.5% this morning. So the fragility to the bullishness that was infused into these markets has been punctured. That's really what you need to know. Cloud was good. It was an AI show and tell moment really last night, and you'll get more of it. The cloud is good, but it's not accelerating at the rate. AI added 6% to Microsoft in terms of overall sales, but cloud is not at 40-50% growth. We want to know more about what's happening with the future of the capital expenditure of Google's Alphabet. The risk today is you have the Fed. Will they go for neutrality? What is neutrality at the Fed? There's Alphabet down 5.66%. When it comes to the stock 600, you have a slightly different view, though. You have a monster of a company. Novo Nordisk hitting $500 billion in valuation. Sales surge as Wegovy is rolled out. We'll hear more from the CEO a little bit later on. And you've got Novo Nordisk up just under 1%. Across the assets, if you're nervous in tech, you're probably nervous about what Jerome Powell will say to the market today. What is neutrality from the Fed? Yields tick down to just under 4%. You've got the likes of Diane Swong saying, push back, stay the course. And of course, volatility, we'll talk more about that within the bond market. Dan Everson over at PIMCO says he likes the volatility. It allows him to play the range. Bunds drop in yield. We've had French CPI coming in slightly less than expected. That's at the lowest level in 2 years. That emboldens the narrative that European inflation story is going to give succor to the rate cut narrative in Europe. And the euro drops on the back of that news. So we've talked a little bit about the tech stories. Microsoft and Alphabet, both disappointing investors in different ways, failing to meet those AI expectations. Alphabet search revenue fell short. That overshadows what was otherwise a strong year. Now, the CFO, Ruth Porat, saying, we were really pleased with the cloud strength and pretty broad-based, and there is nothing really to call on the geographic contribution. Joining me now is Alex Webb. Alex, the main takeaways from Microsoft: cloud is good, but it's not exploding, and then it's all about the ad revenue at Alphabet.
Yeah, exactly. The thing is that expectations for these companies are sky high. Microsoft's trading at 36 times its forward earnings. It is now the biggest company in the world by market capitalization. As you said, that cloud business has benefited to the tune of 6 percentage points, or total revenue actually was 6 percentage point boost from AI. You have to remember that fundamentally AI right now is a cloud business. It is a way of getting people to build on your cloud offering. In the case of Microsoft, it's Azure, rather than on that of your competitors. There was a little bit of commentary suggesting that actually the growth from AI shows that the rest of the cloud business was weak. It's sort of damned if you do, damned if you don't. Ultimately, with these sky-high expectations, you really have to post a considerable beat in order really to meet expectations. With Google, it's a slightly different story. They also have enjoyed some benefit from their cloud business, but that core business, advertising, which is still the lion's share of revenue and indeed profit, and of course, the cash flows generated by that business are what's funding a lot of the other expansion, that slightly missed expectations, and that cyclicality is something that investors have not taken well.
And AMD is trying to snap at the heels, of course, of NVIDIA, and this is all about projecting your revenue levels forward, and that's what has punctured the ambitions of the shareholders there.
Yeah, there's this chip they have called the MI300, or chip range, which they are predicting sales essentially from a standing start. This chip was unveiled last month of $3.5 billion this year. That seems quite meaningful. The market had been looking for, in parts, as much as $8 billion. And of course, if you compare that to NVIDIA, the big rival in this space, now the largest chip maker in the world by market capitalization, it's gone from $27 billion in revenue in the 12 months through January 2023 to an expected $59 billion in revenue in the 12 months, which will end today. That's their reporting calendars. So yes, AMD is growing, but the pace of growth is so much lower than that of NVIDIA, and that has disappointed some investors.
Yeah, I've had various people come on the show and they talk about, the poor man's NVIDIA. What is the alternative? Some here in the US talk about Broadcom. Now, Elon Musk, he had a $55 billion pay package. Well, that was until a Delaware judge decided no. Now, what are the ramifications of this? I know that it'll probably go to appeal, but in the very first instance, I mean, this could be quite injurious to Musk and his empire.
Well, I think it's injurious to Musk himself, certainly. He doesn't, if this will, if it survives the appeal, this ruling, then it looks like he won't have access to all that capital. That might have implications for some of his businesses, not least Twitter, which the understanding is that its business is not doing anywhere near as well as it had been as a public company before he took it over. If it needs more capital, it's going to be harder for him to find that. Not impossible, but if he's not sitting on $55 billion worth of equity, then it's a little bit more restricted. The shareholders, maybe the ramifications of this are in fact less protection, because he's talking about possibly then moving the registration from Delaware to somewhere like Texas or Nevada, which actually is where Twitter is, or X is now registered. Mm-hmm. That would potentially give shareholders less protection than they do in Delaware, where a lot of people will say, actually, the state is doing its job properly right now.
Indeed. Well, the stock is down, 2.74% at the moment. So another bit of a pump. Tech broadly this morning having a little bit of a stress inflection. Alex, thank you very much. Alex Webb on the top tech stories. Let's turn our attention to politics. Bloomberg News and Morning Consult have surveyed voters in the swing states on their thoughts regarding immigration and Donald Trump's legal battles. She's back. She's got up early. It is Anne-Marie Jourdain from the surveillance team. So Biden trails Trump in all 7 swing states. You sat down in the seat and you were saying, now look, do you know your swing states? And I ended up with missing Wisconsin. But tell me the relevance to the swing states, and Biden is under pressure here.
Absolutely. What we've seen in multiple iterations of this poll, then Trump was able to expand that lead in these 7 swing states. In this latest one, is Trump still has a dominance when it comes to key issues that voters care about, notably the economy and notably immigration. Also things like crime. Who can handle the wars right now that are going on in Gaza and Ukraine? Trump continues to get better marks on this. And the 7 swing states are so important because Trump won 6 out of the 7 in 2016. Biden won 6 out of the 7 in 2020. So for international viewers, Manis, this is where American elections are won and lost. And when you look at these battleground states, Trump right now has the lead.
But if we look at the immigration issue, I mean, this is where the GOP are winning. They're winning on message. They're winning on why it matters. It's got to be said that we did this poll January 16th to the 22nd, and this was before Biden pledged to shut the border if he gets a little bit more control. But this has ratcheted higher in terms of a real issue for America.
What I find so interesting about the latest survey for what our pollsters conducted out in the field is that while the economy still maintains the most important issue, what you see is the gap is starting to narrow with more people saying that actually immigration is our most important issue. So 2 things might be happening. We saw the Michigan survey, we saw the Conference Board yesterday. Are people starting to feel what the data is showing? The economy is feeling better. So they're starting to say our next most important issue is immigration. When it comes to immigration, Biden, congressional Democrats continue to get very poor remarks. As you said, this was before Biden came out and said, if this bill was passed that is being discussed right now in Congress, I would shut the border down. He's needing that. He wants that congressional approval to do so, or this is going to be held up in the courts. But the fact of the matter is, if immigration is becoming more of a campaign issue going into November, and what you see in these swing state polls is that they trust Trump more than Biden when it comes to that issue.
What is it? 60% of registered voters in the 7 swing states, they blame Biden on this border issue. Now, you've mentioned Trump, obviously, where he's winning in sort of hearts and minds and policy. But it's quite interesting when you look at the subplot, because what he's charged with could have repercussions in terms of whether they would actually vote for him. Run me through what that is, what component part.
So we know he's dealing with a massive pile of legal issues. And what our poll found is that 53% of voters in these critical states say that if Trump was convicted, they would be less willing to vote for him. They do not want to vote for him if he's convicted. So he faces these 91 criminal charges, 4 separate indictments. We do know the Trump camp is trying to delay a lot of this. This is likely a reason why nearly 1 in 4 of swing state now Republicans are unwilling to support him if convicted. That's his own party. Morning Consult Vice President put it really well.
Come through. That just does not come through.
Well, right now he's campaigning on it. But if there's an actual conviction closer to the election, this is where he can lose support. And the Morning Consult Vice President Caroline By put it well. He loses 1 out of every 5 of his 2020 voters if guilty. Given the margins of where you need to pick up votes in these swing states, this could be existential for him. November.
Well, it certainly doesn't come through in the media sense. That was my point.
Too early, not at the moment.
Can we just coalesce one quick issue which you and I have covered a lot, which is Saudi's relations with the United States of America, and we understand during that brief pause in fighting that Saudi and America are again engaged in a potential defense alignment. Quite interesting timing.
Yeah, it is interesting. What we saw is an absolute pause of discussions because this defense pact was tied with normalization with Israel. And given what we're seeing in Gaza, Saudi Arabia is not going to be able to sign up to normalization with Israel. So what potentially we can maybe see is they're going to unlink the defense pact with normalization. So have a separate defense pact with the United States. And we do know those defense pact discussions are happening. I would say look to what Bahrain did with the United States as potentially a roadmap of what we could see out of Riyadh and Washington.
But of course, Riyadh wants it done in Congress and not, a presidential agreement. Anne-Marie, thank you very much. Good to see you. Come back again. Get up early again. We'll get her out of surveillance once in a while. We are lucky. We are blessed. Remember that. At 5:11 a.m. Other stories on your Bloomberg terminal that are trending this morning? We have learned that Byron Allen has made a $14.3 billion offer to buy all of the outstanding shares of Paramount Global. That's according to sources. The plan is to sell the film studio, the real estate, and other intellectual property. Allen will keep the TV channels, including Paramount Plus and streaming. Starbucks shares are gaining this morning in pre-market. The coffee chain reported a first quarter comparable transactions growth that came in ahead of the estimates. I'm part of the numbers. However, the company's comparable sales fell short of expectations. H&M has appointed Daniel Erver as CEO. The sudden leadership switch comes as the Swedish fast fashion group reports fourth quarter profits that fell short of the estimates. Shares in H&M fell this morning by as much as 10%. And Samsung has posted its fourth straight quarter of profit decline. That's after a long-awaited chips recovery delivered few returns. Net income came in at this, 74% of a drop to $4.5 billion, beating the estimate. Samsung's chip division saw an operating loss of $1.6 billion, which was wider than expected. Coming up in the show, counting down to the Fed decision with TD Bank's Pooja Kumra. She joins me next, right here on Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg Brief, I'm Manus Cranny in New York. So investors were counting down to the latest rate decision from the Fed. Let's discuss what's at play. Pooja Kumra is the senior European rate strategist at TD Bank. I've written down here, patience and prudence for Powell will be the byline of the day. How does he invect neutrality rather than a dovish tone, if that's the road that they choose to travel? Good morning.
Good morning. Yes, it's going to be a very tough decision, especially given the fact that Fed has already done their pivot in December, and markets already pricing around 150 basis points in cuts for the year. I think they are actually going to be vague. We know that they will be removing the hiking bias from the statement, but I don't think that they would be that open in the press conference as to what is the next stage. I think there will be a recognition of the deflationary trends that are happening, especially with last week's core PCE data. But I think pointing to March rate cuts is something that it will be more similar to, I think, what Waller said 2 weeks back, that they want to be more proactive when it comes to policy. They want the normalization of policy rates rather than being very reactive right now, because the signs of the economy are pretty strong for them.
Do you think, if you look at the JOLTS data yesterday, it's interesting. I mean, up at 9 million, an upward revision to the previous month. I mean, they've got all the cover in the world not to deliver a dovish tilt, don't they? I mean, not just that, but also the PCE on a 3-month, on a 6-month basis. They have cover. And Diane Swonk, I think, says it best, where she says, look, push back, stay the course. You don't want another sort of history to write you up as having gone too soon and too early. That's paraphrasing Diane Swonk.
No, totally agree. Like data so far, I mean, we are seeing that easing, but clearly it's not, they're not in the state where they have to react quickly. But also the Fed officials know that they can clearly create a soft landing for this scenario. And I think that's why they don't want to be actually too late to act as well. We know policy has lags, and they don't want those lags to set in such a way that goes against them. So we at TD are looking for cuts in May, but we do realize the fact that March pricing will remain live, just given the fact that Fed will have a lot of data coming in. And I think when it comes to Jan data, we all need to know that there are a lot of seasonal factors also driving. And I think that's where markets could stay choppy when we are trading the entire February, unfortunately.
Which takes me very nicely to one of the narratives, and this is from PIMCO and from Double Line. They're talking about MOV, and we're just seeing readings that we haven't seen since the end of 2011 and the end of 2022. So there's these spikes and vols. Do you embrace the inner MOV volatility and sort of buy these dips, as it were, spikes in yields, dips in price? Is that the way? Are you trading bonds more than, well, yield to maturity?
So yes, I mean, I totally agree. Like in the near term, we are basically looking for any dips. Like the clear message that we got from ECB last week and possibly even BOE tomorrow will be that, you know, the cuts are coming. So any sell-off is taken as an opportunity to buy. And that's been the key theme. Even when we look at the fund flows, we have seen some significant flows going into the treasury because I think markets know that cuts are coming. It's not a matter of if, but it's a matter of when. So in a Q1, we are basically looking at dip buying, and basically our long-term yields is basically to be long, and we are looking for treasuries to end the year closer to 3%, and I think that's what tells you what we are thinking about duration right now.
And of course, the dollar, it has had a tough month, down 2% on the month. And I've had various people say to me, it's a rate story, not a risk story, because pro-risk, we're down 2%. Do we morph into a period of time of where dollar is dominated by rate cuts and again extends its losses?
Yes, I think rate cuts, and which is a function of growth as well. So I would totally agree with you. I think that's what I think all asset classes will be playing that role. And I think even when it comes to yields, what outperforms and what underperforms is a function of clear monetary policy. So maybe in the near term, we could see more value in holding bonds versus USD, just given the fact that I think we are seeing clearer signs of deflationary pressures in Europe versus US. But I think that's what, no matter what asset class we're talking about, it's basically who goes first and how much to the extent they have to ease policy in as we go ahead. And we do think that Fed will need to go more in terms of how much they have to ease this year.
Well, the French inflation at the lowest in 2 years, I think, certainly says it all when you look at that bond market this morning. I mean, they are flying high. Pooja, thank you so much. Pooja Kumar there of TD Bank. And just on that note, have a look at these bonds, because you have French inflation, as I say, cooling to the lowest level in 2 years. That really has lit a fire under the bond market. You're looking at yields dropping by 4 basis points. Yields drop here in the US. I mean, you're going to get a lot of nervous bond traders ahead of the Fed. 10-year yields in the United States at 4.02, and that's ahead of the UK Bank of England tomorrow at 3.87. Good morning from New York.
ones we're working on at the moment is how do we charge back into Ukraine as soon as the European authorities say it's safe to fly in Ukraine again. Now, nobody knows when that is going to be. But we were Ukraine's second largest airline when the Russians invaded on the 24th of February last year. We would be Ukraine's biggest airline the week after they tell us it's safe to go back in there, because we're going to charge back in there. Initially, we have a plan to open up about 30 routes from 4 Ukrainian airports back into the European Union. And then we want to, I think within 6 to 12 months, open up 3 or 4 large bases in Ukraine. And we're talking to the Ukrainian authorities about creating an environment cost agreement on which we could lead the charge of air travel into a post-war Ukrainian recovery.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
It's Bloomberg Brief. I'm Manus Cranny in New York. Let's turn to the banks. UBS is cutting a group of senior bankers as the integration with Credit Suisse continues. Bloomberg learning that the firm made several headcount reductions last week. The bank has said that it aims to save around $6 billion in staff costs in the coming years. That's after the Credit Suisse deal closed in June. A different story for Nomura. Japan's biggest brokerage surprised investors with a buyback of more than $670 million. That's as the firm returned to profit after trimming costs at its key investment banking and trading division in recent months. Nomura posted a strong set of results in fixed income trading, while an uptick in deal making and the retail business also helped support the earnings. And Santander's record year. The Spanish lender posted results that beat analyst estimates with the highest quarterly profit ever, thanks to new clients lifting the firm's lending income. The executive chair, Anna Botten, says another great year ahead.
We are very confident we can maintain a positive momentum in 24 across all our global businesses. And that is why we're increasing in profitability again in 24 to 16%, which is a very ambitious number, but in line with what we said at our Investor Day. So yes, it's not such a good scenario in general, but for us, it's going to be a better year.
Check in on the currencies ahead of this Fed day. We're building up to the jobs day on Friday. The dollar is up an eighth of 1%. You're looking at the best months in September for the dollar overall. Likewise, you are looking at the euro taking a dip on that lower than estimated CPIs from France.
I'd like to kick off with a very simple question. Has the whole Brexit process been messier, less messy, or as messy as you expected way back in 2016?
Was it as messy as we thought it would be?
probably was, and I tell you why, because of the fundamental mismatch between, if you like, rational policy in the UK and what was, in a sense, performative ideology in the UK. And I think that was the problem. We could have had the deal, the so-called Windsor deal, several years ago, but the Johnson government simply did not want a deal on those terms.
But I think for the short to medium term, the next 3 to 5 years, the Brexit will be net negative on the UK economy, no question about it. What happens over the longer term depends on what the British establishment or the future UK governments do. One, I do think ultimately they will finish up in the next 10 or 15 years putting some kind of, I call it a trade deal with Europe similar to Norway or Switzerland. I disagree with Declan. I think they will pay into a European budget. I think they will have no choice. It is too big. The fundamental strength of the single market is something that is too attractive for the UK economy to be excluded from.
Maybe the messier part is yet to come.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
You're welcome back. It's Bloomberg Brief. I'm Manus Granny in New York. This is the agenda for you this Wednesday. Tech disappoints. Results from AI stars Microsoft, Alphabet, and AMD leave the investors underwhelmed. Novo Nordisk reaches a market value of $500 billion. The obesity drug maker says sales and profit will surge again this year. And countdown to the Fed. The central bank is expected to stay on hold today, avoiding signaling any imminent rate cuts. A very good morning to you. When it comes to the bullish ego, it is easily wounded in the form of AMD, Microsoft, and Alphabet. S&P 500 is down by 0.5%, but it is the NASDAQ which is a brutalized, tortured soul. AMD is down another. There's Microsoft down 1.6%. Yes, the cloud is doing well, but it's not growing at 50, 60%, which is what the market essentially wanted to know. When it comes to AMD, this is on the chip side, down 6% after hours, cascading lower this morning. This is about a weaker guidance from AMD, dragging the entire chip complex lower. Now, leaving it to the Europeans, they brought us a little bit of cheer. You might be on a diet, you may be on Wegovy, you may be on another form of weight loss drug, but all hail Novo Nordisk. They are now worth $500 billion. They've guided for a higher operating profit for this year to 29%. So that is rising on the stock 600, but we're just dragged a little bit lower at the moment. That is the state of play on equities. To the bond market, this is what we've got. We're waiting for the Fed. Will they pivot to this form of neutrality? Will Powell squander the backup in yields that we've had? Bunds ticking down as we see the lowest inflation in 2 years in France. Some of the areas in Germany are reporting perhaps not just as low as had been as hoped, but the French inflation story is definitely bolstering the overall narrative that Europe could cut earlier, perhaps, in rates than the market had anticipated, and that's reflected more in the euro-dollar, 108.28. So you have your plate full, quite literally, with risk and everything to interpret. Joining me now to understand how investors are preparing for this Fed decision is this for setting the table for March. For a cut.
It's very live. Markets are right to be pricing it 50-50, although it varies day to day based on jobs data, inflation data, the GDP data. We've had a series of data hits that have moved that likelihood around. I think the big influence we'll get from today, or from the statement itself, is whether they'll see this as two goes. One, to drop the hiking bias in the language, but talk up the possibility of a live March meeting, or whether they see that they need more information and push it into Q2. And I thought it was interesting in your intro about the relative pricing of the central banks around the world, the potential now the ECB go first, when most of the market at the start of the year had assumed the Fed would go first.
Yeah, I mean, that data in Europe this morning was really quite I think, really quite chunky on the French side. Diane Swong says, push back, stay the course, Don't be seen in history as having blinked too soon. Do you think that is part of the narrative at the Fed, in that they've had a few mishaps in calls, to say the very least, and they've lost the run of the narrative? Well, they're still losing the run of the narrative because the market still pricing in 5-6 rate cuts. Yeah. The last guidance was 3 from the Feds. How do they close that gap further?
Yeah, sometimes we can look at monetary policy as a very quantitative, abstract concept, but actually it's a very human concept. These are people making decisions about financial conditions for not just the world's biggest economy, but the world at large. And I think you're right to point to that human element of all of this. Having been bruised by a widespread use of the word transitory, which subsequently became discredited, albeit that's still a very live debate in economic circles, you're now having a situation where will there be, if you like, too much caution? I think that could have been a fear if we saw some of the rapid softening of the data at the back end of Q4. But the data's been really strong at the start of Q1, and I think this perhaps reinforces the idea that perhaps March comes a bit too soon, and May, June feels like the better timescale to just give yourself the additional optionality. We're still in the phrase of, I think, maximum optionality for central banks that could go either way if the data supports it.
But you have a salutary warning, and it's around debt, and I was surprised that you brought 2 portions of debt together. You warned on the extraordinary fiscal situation. That's fine, I get that. Sure. But household deficits remain the biggest issue facing the global macro environment. Savings are dropping, the pandemic money is running out, we're dipping into our savings here in this country to perhaps fund our lifestyle. But you talk about an extraordinary fiscal and household deficits. Yep. Quantify that for me, if you can.
No problem at all. So about 40% of the federal debt needs to be rolled over the course of the next 36 months. That's benchmarked against other major economies. That's a high proportion. The economy I look at closest, the UK, about half that proportion needs to be rolled over that time scale. So you've got a high refinancing problem on the state side. But I think the bit that has got so crowded out, as everyone is focused on the size of the federal debt, is the household debt. Credit card nominal balances are up 44% in the United States since January 2020. That has fueled the consumer revenge spending, but that has to be paid for. Now, that is fine as long as the jobs market remains very resilient, and we saw the JOLTS data support that. But does it provide perhaps greater, what I describe as greater elasticity of policy? It's not a pithy phrase, but it perhaps describes how if you've got such a large nominal household balance and indeed a drawdown on the savings rate, which is about 200 basis points below its long-term average in the United States, and it's in line across the rest of the G7. That's a pretty difficult cocktail to navigate when you've got tough refinancing conditions, rollover conditions for both the government and the household sector.
As an Englishman in New York, you arrive here, so we'll give you an English question, which is the risk, as I see it, is a building narrative of one person to call for a rate cut on the Bank of England tomorrow. But do you think that dam is beginning to crack? Do they have the capacity to cut rates at home in the UK?
Not right now. I think of the big 3 that we look at, the United States, Eurozone, the UK, I think the UK would be the last to go. It had particularly strong core inflation in Q1, Q2 last year. And there's a fear of a bit of a repeat in the United Kingdom. So that's, I think, why the Bank of England will remain later. But I think you're right. We might get a 3-way split vote tomorrow in the United Kingdom. 7 voting for a hold, potentially Catherine Mann holding out for a hike, and Switi Dhingra potentially voting for a cut. How do markets price that? We'll see, won't we?
Exactly. It could be an interesting fly on the wall of that conversation. Simon stays with us. We've got more to do. An Englishman's perspective of the United States coming up. We give you everything here on Bloomberg Brief. Coming up, we got Europe has a second company worth $500 billion. I think it said $1 billion a short time ago. Well, there you go, $500 billion. Novo Nordisk. We'll dive into the results and we'll hear from the CEO. That's next on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
It's Bloomberg Brief. I'm Manus Cranny in New York. So Novo Nordisk smashed past a $500 billion valuation this morning. That's after the drug maker beat expectations on the fourth quarter, thanks to its obesity shots, Wegovy and Ozempic. The CEO spoke to Bloomberg a little bit earlier this morning about the plans for growth.
We are really excited about the opportunity, as you say, and as we see a continued strong demand for our products, we'll be ramping up capacity, and we are, more or less doubling our spend on capex this year compared to last year. In 23, we announced 75 billion Danish kroner of expansion plans. So we are scaling, and that's you can see from our increased guidance for this year and the fact that we now bring more starter doses into the US. So we see more and more products coming in, and we'll be investing to produce even more for the future.
Can you also give us a specific update on Europe? I know some of the supply is quite restricted in Europe. You've launched Wegovy in 6 European countries so far. Supplies have been very difficult to get hold of. Is this the year where Europe gets more?
Yes, so we see that the very steep uptake is not just a U.S. phenomenon. It happens in Europe as well. So just like in the U.S., where we have had some restricted number of starter doses, we'll try also in the in Europe to make sure that patients can have a good experience when they start on our products. So as we this year will be launching in more European markets, it will be with as a set volume and ways to make sure that those who start on treatment can also to the best of our ability, make sure that they can continue getting products. So this, we believe, is a responsible way to serve patients, and that will be the model we'll be going forward with.
And you, sir, are very confident that you'll actually be able to keep up with momentum, given the introduction from Zepbound by Eli Lilly in the U.S. I know you were talking about some of the starter doses. If you look at, you're looking to double that amount in the U.S., will you continue to boost supply through the first quarter?
Yeah, we have guided that we are more than doubling the starter doses in the U.S., and we started that here in January. So that still have to be seen in the script data in the U.S. So you can say that's a sign that we have significant more products coming to the market also in the U.S. And if you look at it, we have access to some 50 million patients in the U.S., and we are only serving a small fraction of that. So there's ample opportunity for competition, and this is really about growing the market, serving more patients than it's a matter of market share.
Novo Nordisk CEO there saying the company sees ample opportunity right here in the United States. So let's bring in Emily Field, Head of European Pharmaceutical Research at Barclays. She has an overweight rating on the stock for now. Emily, good morning. Good to see you. The issue is, in my mind, can anybody catch up with them? We'll come to that in a moment. But you've looked at the numbers, you've spoken to the company, and you seem quite emboldened by the deliveries of Wegovy here into the US. Run us through what you expect on that side, first of all.
Yeah, so thanks for having me. I would say the first number that we went to upon the release this morning was the full year 24 guidance, and 18 to 26% constant currency revenue growth. We all breathed a sigh of relief because coming in today, all we knew was they were targeting a significant supply increase for Wegovy, but we didn't know what significant increase translated into numbers. So with those, with that guidance bracketing consensus, I think we're feeling good about the supply ramp mostly in the United States, but also in Europe going into this year.
You're also quite bullish on the operating margin as well.
Yeah, that's one point where they did expand their guidance for operating margin throughout 2023 because just as profits keep growing, they have already set their spending plans, so they have to release some of that through margin.
So let's put Barclays to UBS. Novo remains our least preferred based on the valuation of the long-term trends. It's rich, it's fully valued. Would you challenge that at Barclays? Do you think it's fully valued?
Oh, I mean, we see further upside in Novo just because we're really just at the beginning of this story of obesity as a therapeutic treatment. The numbers of patients that you can get to are just so vast in the United States, and not only in the United States, but globally. And, Wegovy's been on the market, but severely supply constrained. Zepbound from Eli Lilly just launched. So we think that this is going to be a multi-year growth story.
How much competitive advantage in terms of ability to deliver does Novo have relative to, to Lilly, relative to the other competitors who are snapping at their heels? If I say to you, it's a 2-year advantage. I mean, they're investing heavily in manufacturing as well. How far ahead are Novo relative to the pack?
I would actually push back on that 2 years and maybe extend that to 5, or if not even more, because we see Novo and Lilly as the market leaders in this field. They are already advancing their next advanced technologies into pivotal clinical development. And then to your point exactly, supply is a huge competitive advantage. And the last competitive readout we saw was Pfizer in a phase 2 oral study towards the end of last year, and that did not work out. So, of course, other pharmas are investing in buying companies, investing in their own pipelines to catch up, but we think they have a very long way to go.
The debate that Danny and I have with various analysts and people when they come on board, and we did with the CFO the last time he was with us, was about coverage. I mean, if we look at North Carolina, for example, they're cutting off coverage. They spent $100 million. I mean, is that idiosyncratic or is that a risk?
Yeah, how we've seen this whole debate on, price spend playing out is that we think that both companies are going to continue to produce data such as the SELECT cardiovascular study that we saw from Novo towards the end of last year, that by losing this weight, you will have fewer things like heart attacks, strokes. Lilly's having a study in sleep apnea the first half of this year. So over time, we're expecting not only price to come down, but more data to come out that shows that this will save the system money over time with expanded treatment.
Yeah, I don't doubt. I have some friends that have used this product, and it has been revolutionary for them. A quick beat on Novartis. I mean, it's having a tough day, down over 5% at one juncture. The essence is the guidance is deemed to be too conservative. At Barclays, is that a read?
Yeah, I mean, I think a lot of Novartis's move today probably comes down to the setup. 3 beat and raise quarters in a row last year. The stock was our best performing in our coverage coming into today. So I think expectations were just very, very high. There were a couple of product misses for the fourth quarter. And yes, the operating income guidance did come in slightly below the street. The call will be this afternoon, and I think that's going to be the key focus. Is this a realistic guidance, or is this conservative to perhaps be a beat and raise story again?
Okay, Emily, let's see. Miles to go in the Novo story. You're fully bullish. Hope you don't meet the UBS analyst anywhere in town soon. Emily Fielder, European head of pharmaceutical research over at Barclays. That could be an interesting lunch. Snapshot of risk for you on the energy markets this morning. We are down on Brent by over 1%. Again, this battle royal on supply is pervasive, and the dollar has had quite a strong month, over 2%. It's the first monthly gain since September on the Red Sea arrest, so just keep an eye on that. We're going to have more with Simon French, an Englishman's view of US politics on Bloomberg Brief.
Timelessness and sustainability go together, right? You can't expect to be timeless if we're run out of resources. So for me, sustainability is not a side activity. It's not a reaction to external pressure. It's core to who we are, what we stand for. And to a very strong extent, it's about future-proofing our business, right? You need to focus on sustainability to recruit. More and more, that younger consumer we're talking about, they want to work for companies that care about this planet, that do more than just kind of generate revenue and profit. You need sustainability to attract consumers. More and more, including that younger consumer, they care deeply about what are you doing differently? How are you making a difference? Investors, particularly in Europe, more and more place value on what you're doing in sustainability. Many of our partners have expectations on sustainability.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
This is Bloomberg Brief. I'm Manus Cranny in New York. Let's look ahead for the rest of the day before the bell. We have Boeing reporting results amid safety probes. Then the Fed announces its rate decision at 2 p.m. With the Chair Powell's press conference half an hour later. And after the bell, we have more earnings from Qualcomm. Well, still with me, it is Simon French from Panmure Gordon, an Englishman in New York. No, you're not staying.
No, just 3 days, unfortunately.
Just 3 days. But we have this new poll this morning for Bloomberg, and there's this dramatic shift. Border security is the #1 issue in terms of Biden and Trump in the 7 swing states. It's 48-42 in a head-to-head match, and Biden is getting the rap for the migrant surge. So this is inside America, in the swing states, so that's the only place that any of this really, really matters. You've parachuted in. You're going to trot around the United States of America. How are Brits and Europeans looking at the risk of a second term? And more importantly, how do markets begin to price this?
So Donald Trump, if it is going to be him, is not an unknown quantity in the way he was first time round. So I think from a geopolitical standpoint, there is an understanding of what his operating model will be. But there are going to be some material changes to his international policy and his industrial policy domestically in the US that changes the corporate landscape, corporate earnings landscape for European investors looking for exposure to the United States. And I think particularly of European defense spending as a very, very salient issue. There are much better geostrategists out there talking about the potential for Trump, I think, briefly, to pull the United States support for NATO away to encourage the rest of NATO to push up their defense spending as a proportion of GDP. Is that massively accretive for European, not just defense volumes, but also quasi-industrial orders as you get sort of reprofiling what they do? I think that's a really interesting perspective for European investors of the impact of a potential second term for President Trump.
I mean, look, it's not a foregone conclusion. We've still got machinations to go through, and there is a general election, and Trump is losing support, we understand, from some of his core, I was quite interested by this, some of his core voters would not vote for him if he is found guilty in a criminal court and in a case there. NATO, I mean, we are at a very precarious moment in time in the Russia-Ukraine war. If we go to the end of this year and something around NATO was to happen with Trump, is this what people are most worried about at home in Europe?
Yes, undoubtedly. There are capital markets implications broader than just defense. A potential weak dollar in order to facilitate a more mercantilist economic strategy here in the United States, a changing of energy subsidies, the pricing approach of the Bidenomics on the US pharma sector. All of those are side issues compared to a scenario where the implicit guarantee from the United States to European defense, which has been in play for 80 years, gets withdrawn. Now, I would fully expect it would be part of a bargaining mechanism. It's consistent with the man, isn't it, to say, look, we then delivered an uptick in European defense spending that stopped the US constantly being on the hook for defense in the European Union. I get it, but it's a very dangerous calculation, isn't it, geopolitically, whether you can get that balance right of a credible negotiating position without giving too much confidence to Putin to do something over and above what he's already been doing in Ukraine.
Okay, Simon, thank you very much. Good to have you with us. Enjoy your time in America, and you can report back an Englishman's postcard from New York. Thank you very much for being with me this morning. What do you need to know? You need to know whether tech has been brutally wounded or just momentarily punctured from the bullishness that was infused into these prices. Microsoft down by 1.2%. The cloud is solid, but it's not growing at 50%. AI did deliver a 6% boost to the numbers, but there's disappointment that core search in Alphabet, in Google, did not hit the numbers. And AMD gave a lackluster outlook at best, down 6%. And Paramount, of course, up 13.38%, soaring, as Byron Allen is said to have offered $14.3 billion for all the outstanding shares. That's it for Bloomberg Brief. Surveillance is up next, right here from New York. Good morning.
Swinehart is supremely skilled at navigating the rapids of real estate. That's important because real estate development is the next frontier in the business of sports. Fenway Sports Group has a blockbuster project in the works.
We have 5 acres to play with here. And when all is said and done, we expect 2 million square feet across residential, commercial, retail.
Given the track record of Messrs. Henry, Werner, and Gordon, the Fenway Corners plan comes with high hopes of success. That doesn't mean it will be an easy lift, especially right now.
What have you learned with the dynamic move of the interest rates? Do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
Julie Swinehart took me on a walking tour into the future.
This is going to become the true entrance to Fenway Park, and that's part of the attractiveness of this project is the age-old recipe of increasing dwell times, bringing fans to the park, bringing in businesses, maintaining what's here and preserving some of the historic nature of what you see around you, but making it even more accessible, making it more fan-friendly.
I think it's a very, very tight rope that the Fed is walking. What we expect him to do is to lay the ground for why a March rate cut makes sense.
I still don't think they're actually going to be cutting in March. They're not really in a rush.
March just seems a little premature. I think 50-50 is a good probability.
Do they go in March? Probably not, but they likely ease at some point in the second quarter to try to get ahead of any weakness.
I think the Fed's in a really tricky spot.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance alongside Lisa Abramowitz together with Anne-Marie Hordern. I'm Jonathan Farrow. Your equity market on the S&P 500 negative by 0.5%. It is Fed decision day. Remember the middle of December when Chairman Powell said we're kind of talking about rate cuts and then Williams came out and said we're kind of not. Which one is it today?
Well, honestly, I think everyone's gotten carried away with, okay, rate cuts, and probably this particular press conference is going to remove the hiking bias. We're going to be parsing through the granularities of this statement this afternoon at 2 p.m. and then the press conference at 2:30. Unlikely they're going to make a move, but they're probably going to lay the groundwork to have flexibility to make that move, maybe in March, maybe in May, maybe after that.
A two-part story this morning. We need to talk about the tech earnings as well. High expectations. Let's put it that way. Before we start talking about disappointment, let's go over what we looked like over the last 12 months. Alphabet was up 60% over the last 12 months. Lisa, Microsoft was up 65%. I think you have to bear that in mind before you look at the pre-market price action and consider the numbers of yesterday.
I could not agree more. The bar was clearly incredibly high. We were asking yesterday, is that bar very high? The answer is absolutely. People want more. Honestly, these earnings were not bad at all. When you take a look at some of the underlyings, Microsoft's net income rose to the strongest quarterly expansion going back 2 years. Google talking about a real expansion in their advertising revenues. But it wasn't enough, and it came in slightly disappointing on the Google side, so forget it. AMD, same story in terms of the projections with some of their AI outlook and the chips related to that. This is about high expectations, or maybe unrealistic expectations not being fully met right away.
You mentioned Microsoft. Go through it line by line again. Strongest revenue growth since 2022. Cloud services sales gaining 30%. That's some pretty decent growth.
And this is on the hopes and dreams of artificial intelligence coming to the cloud. Here's the key question. How quickly do investors need to see that AI monetized? Because right now, it's clear that that's driving a lot of demand. But the expectations for how much money that would actually drive to these companies clearly outstripped reality.
That is the question right now. Microsoft a little bit lower by about 1%. Alphabet a whole lot lower than that. Need to talk about the politics as well. AMH, a new poll from Bloomberg and Morning Consult, not for pretty reading for the President of the United States.
No, absolutely not. In this latest iteration of our poll, we do see Trump continuing to gain ground on the most critical states, these 7 battleground states. And what I find very fascinating is the fact that still the economy remains the top issue, but the gap is starting to narrow in terms of those voters that actually say immigration is a top issue. And if you look at those aged 25 and older, the economy and immigration, Jonathan, are neck and neck.
Greg Valliere of AGF coming up on the programme a little bit later this morning. Look out for that. Let's lay the table for you. This is what it looks like going into the Federal Reserve. Equity futures on the S&P 500 pulling back by 0.5%. A muted couple of days in the equity market. In the bond market, yields unchanged, 4.026% on a 10-year. In the FX market, the euro negative 0.2%. 108.26. Bramo, I'm not sure what's more important, Lagarde on inflation or Lagarde on politics. Lagarde seems to be more interested in politics right now, based on what we've heard over the last few weeks.
She got a lot of criticism about her comments on Trump, and her response, doubling down. And that seems to be what we've heard pretty much time and time again when she goes on different news channels and different press conferences. So again, question is, what's she trying to accomplish in her role as the head of the European Central Bank, when she's talking about U.S. politics?
Kind of inappropriate, but let's frame it as follows. You've got central bankers in Europe talking about politics in the U.S. and politicians in the U.S. talking about central banking in Washington. You notice that as well? Yes. It's kind of role reversal right now. Every single Democrat seems to have something to say to Chairman Powell.
And the latest was Sherrod Brown last night. They're all saying that you need to cut rates. But a lot of this, and you know, our analysts told us this as well, this is political grandstanding. They're saying it now because the Fed is going to have a decision today, but also they've been saying it for months that they want the Fed to cut rates. The issue is this could put Powell in a tricky place when he goes and visits Congress. When he goes and sits down with Republicans, are they like, are you cutting rates because the Democrats asked you to and we're headed to an election? It's tricky for him this year, given it is an election year.
Do you think, though, that anyone really thinks that the Fed is going to say, oh, Sherrod Brown asked me to cut rates, I think I'm going to? I think that the bigger question to me is, what is the messaging from some of these Democrats that are saying this in terms of the reasons for inflation? What Sherrod Brown said is, it is becoming increasingly evident that restrictive monetary policy is no longer the right tool for combating inflation. Are they basically going to try to shunt the blame to the Federal Reserve for the lack of sentiment that seems to be not reflecting some of the rosier economic data coming out?
It is political grandstanding. It was inappropriate when the Trump administration did it. It's inappropriate now. What's stupid about now, and really, really stupid about now, and we should use that word, they're about to cut interest rates anyway.
Yeah.
What are you doing? What are you doing?
Just hold tight. This is about how they're trying to craft the message around inflation when it's been pretty muddy. And that's not necessarily so clear.
Coming up this hour, Peter Oppenheimer at Goldman Sachs following disappointing results from mega-cap tech, Greg Valliere of AGF Investments, and the latest Bloomberg poll shows Donald Trump expanding his key leads in swing states, and Bruce Kasman of JP Morgan ahead of today's Fed decision and US payrolls on Friday. We begin with our top story. Mega-cap tech disappoints. Peter Oppenheimer of Goldman Sachs expecting the scale of the rally from here to be tempered, writing, quote, while there are upside risks to profit growth, it is still likely to remain modest as lower inflation dampens nominal GDP and revenues. Peter Oppenheimer, Chief Global Equity Strategist at Goldman Sachs and author of his new book, Any Happy Returns, Structural Changes and Super Cycles in Markets. Peter, great to catch up with you, sir. Congratulations on the book, and what a fantastic title. We can talk about that in just a moment. Let's talk about the tech earnings overnight. Was that disappointing, Peter? How would you frame those numbers overnight?
Well, I think, as Lisa said, exactly, these are good numbers, but the expectations were huge. And there's a real issue of traveling and arriving. You know, the markets have been rallying strongly, not just in mega cap tech, but broadly speaking, you know, over the last 2 or 3 months. Since October, equities up, you know, almost 20%, one of the strongest rises we've seen for a very long time, as very, very positive expectations are priced in about soft landing and the speed and extent of interest rate declines as inflation moderates. So these are not bad numbers. These companies are generating fantastic revenue growth and are in a very strong position. But I think, you know, the upside from a market perspective in the short term was likely to be limited given the expectations that have been priced in.
And I like how you phrase this, that even though equities have entered the optimism phase of the cycle, you think a lot of that good news has been already priced in. How vulnerable then is this market to some sort of significant downdraft in the face of something actually negative, not just something that failed to meet expectations?
Yeah, there are risks, and it's interesting that valuations, particularly in the US equity market, are in the sort of 90th or 95th percentile relative to history, and implied volatility in the equity market is very low. So there isn't a lot of risk priced in. Equity risk premium, so looking at equities compared to bonds, are also pretty low. So I think there is room for disappointment. It wouldn't be surprising if we get a bit of a pullback, given the scale of the rises that we've seen. I think the biggest risk from here is not really on the speed of the falls in interest rates. As John said, rates are going to come down anyway. The question is just simply when they start. The bigger risk is if you start to see any disappointment in terms of growth, because as you mentioned earlier, profit growth in aggregate is not really all that strong. As inflation comes down, revenues are likely to slow. So any weakness in the economy would probably be the biggest downside risk for equities at this stage.
And we do see some earnings declines actually across the board, with profit margins really being squeezed, at least when you aggregate some of the earnings so far. I'm wondering, based on this idea that a lot of the good news has been priced in, do you get the sense that the US is more overpriced relative to Europe, that maybe there hasn't been as much good news baked into Europe, and on a risk-reward kind of level, there are more opportunities?
Yeah, look, we could have said this for any time over the last decade. The US equity market has been more expensive than others, but that's been justified actually by much stronger profit growth in the US than in Europe or other parts of the world, really for a decade or more since the financial crisis. Having said that, I think it's important to emphasize that the differences are narrowing from a fundamental profit growth perspective. You know, last year, S&P profits were flat. That was about the same as Europe and other parts of the world. This year, we're expecting about 5% profit growth in the US, relatively similar to what we're expecting in Europe and Japan, for example. But the valuation gaps remain. You know, if you look at Europe, it trades pretty much at around 12.5, 13 times PE, the US closer to 20 times. And US companies are more expensive in virtually every sector compared to their European counterparts. So I think the real secret here is to look at a bit more diversification geographically. That isn't to say one should be negative on the US, but look for some opportunities outside of the US. And there's a selection of areas in Europe, Japan, and even in parts of Asia, which I think can offer those attractive diversification opportunities.
Peter, let's talk about that. What am I buying when I buy Europe? When I buy the US, I'm buying Microsoft, NVIDIA. Europe right now seems to be ASML and Novo Nordisk. Peter, what am I buying when I buy Europe?
A great question, John. And actually, I think what's very well understood is the US market is very highly concentrated. You know, big 7 stocks, tech stocks that we were talking about earlier, account for about 30% of the index. What's less well understood is that you've got huge concentration in the European equity market as well. What we've termed the granolas, which happens to be a name made up of the starting letters of the 10 or 11 biggest companies in Europe that cut across technology, luxury, consumer staples, and healthcare. These companies account for about 25% of the index. And when I say the index here, I'm talking about the stocks 600. So think about that. 10 or 11 companies are a quarter of the value now of the 600 biggest companies in Europe. They're the ones that are really driving the index. They're very global. They have strong cash flow generation, high profit margins. They're reinvesting at a high rate. They're good compounders. And these should be, I think, among the global growth leaders that investors should be thinking about, among other great US and other companies.
Peter, now for the appearance fee, the book plug. Let's do it. Any happy returns, structural changes and super cycles in markets. Peter, what do we need to know?
Well, my last book, which I wrote 3 years ago, Any Happy Returns, was all about cycles, what drives cycles and turning points in markets. This is really about long-term structural trends within which those cycles evolve. And we've had a very, very positive secular trend in the last 30 years, driven by disinflation, globalization, liberalization of financial markets, lower global risk premium, and so on. We are moving into a more challenging period where the cost of capital is higher. We're getting more regionalization, less globalization, higher input costs, labor and energy. That means lower margins, so lower returns. But it's also very much focused, this book, on the two major developments which are going to shape the next decade, despite those headwinds. And that is the combined effect of AI on the one hand and decarbonization on the other. And while both of these face significant challenges, they're going to provide significant opportunities for investors as well.
Looking forward to a copy arriving on my desk sometime soon. Peter, thank you. Peter, it's good to hear from you.
So much.
It's good to see us. Thank you. Peter Oppenheimer there of Goldman Sachs. Bramo wants to weigh in. What are we buying when we buy Europe?
Well, I think fashion and skinniness. If you look at LVMH, it was just surpassed by Novo Nordisk as the biggest one. I mean, it just sort of, you put those two together. Can I just say one other thing?
Sure.
In the US, we have the FANG. In Europe, move over FANG. We've got the granolas, you know.
Yeah.
It's sort of, you know, that's the new acronym.
It's a Goldman acronym. It doesn't sound exciting enough,
It's not
does
as
it?
catchy.
You know,
FANG, FanMag,
granola. Just sounds vanilla and slightly boring, right?
Or just breakfasts, you know, that you basically get if you don't want to cook.
Precisely that, with some yogurt, which makes you feel like you're being slightly creative, Bramo, which is what a lot of people do at home, I know. Not that there's anything wrong with that, of course. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. Elon Musk's $55 billion pay package at Tesla has been voided by a Delaware judge after a shareholder challenged it as excessive. The ruling takes a giant bite out of Musk's wealth and could put the fate of his companies in question. It's Musk's first major loss in court and means Tesla's board will have to come up with an alternative to the co-founder's compensation. The ruling is expected to be appealed. Comcast's UK-based media arm Sky is said to be planning to cut about 1,000 jobs across its business. The Financial Times reported the restructure has been spurred by more customers switching from satellite delivery to digital-only streaming. The latest round of cuts represents about 4% of the media group's workforce. Novo Nordisk became the second ever European company to pass $500 million in market value. The Danish drug maker expects a 26% jump in revenue and 29% increase in operating profits due to demand for its obesity and diabetes drugs Wegovy and Ozempic. Novo's CEO says the company is well positioned to grow its patient base.
We have access to some 50 million patients in the US, and we are only serving a small fraction of that. So there's ample opportunity for competition, and this is really about growing the market, serving more patients than it's a matter of market share.
That's your Bloomberg Brief. John?
Yahara, thank you. Coming up next on the program, falling short of AI expectations.
We move from talking about AI to applying AI at scale.
That's coming up next, live from New York City. This is Bloomberg.
Was going to keep reading World Cup. This is a three as the economic picture covering the intersections of Hollywood, Silicon Valley, and beyond.
happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
Live from New York City, stocks a little bit softer this morning. Good morning to you. Here's the why. 3 names in the pre-market down hard. Looking at AMD, Google, Microsoft, Alphabet down by more than 5%. We're negative here by 5.83%. From New York City, under surveillance this morning, falling short of AI expectations.
It was a record quarter driven by the continued strength of Microsoft Cloud, which surpassed $33 billion in revenue, up 24%. By infusing AI across every layer of our tech stack, we are winning new customers and helping drive new benefits and productivity gains.
Here's the latest this morning. Microsoft posting its strongest revenue growth since 2022, rising 18% to $62 billion. Meanwhile, Alphabet disappointing with fourth quarter revenue from its core search business, falling short of analyst estimates. Microsoft, Google, AMD, all lower in pre-market trading today, as hopes from investors over an instant AI boom begin to fizzle just a little bit. Joining us now is Stefan Slowinski, the global head of software research at BNP Paribas Exane. Stefan, great to catch up with you, sir. Just the weakness on the ad side for Alphabet. Can we get into that? What do you think underpins that?
Yeah, good morning, Jonathan. Thanks for having me on the program. So, Google's numbers were noisy. We expected them to be noisy. Overall advertising revenue was a little bit light, but search was pretty much in line, growing a healthy 13%. YouTube growing a healthy 15%. Total advertising was a little bit weak because of their other networks. I think the really interesting thing here, though, is the outlook. Google's sort of hedging themselves a little bit by saying on the advertising side, don't forget we're now $100 billion bigger in terms of revenue than we were back in 2019. So some investors may be looking at that as a signal that they're talking about maybe a bit of a slowdown to come in advertising, especially as comps get a bit harder in the back half of the year.
Do you get the sense, Stefan, that Google has set itself up to compete on the AI front with respect to search, but also with their sort of lackluster cloud business? And I say lackluster just simply because they don't have the market share of Azure or AWS.
I think what Google is doing now is spreading Gen AI across all of their different services, all of their different products. And they're also trying to send a signal to the market that they're no longer just a one-trick advertising pony. They've renamed their Google Other business. They're calling it the Subscriptions, Platform, and Devices business. This is now $40 billion of revenue, growing at 20%. When you put that together with Google Cloud, the enterprise business, which did beat expectations, did reaccelerate, and is almost at a 10% margin, you now have 25% of sales coming from these two other businesses growing at above 20%. So we're about to enter a transition phase here for Google where we start to look at AI across all these different businesses and not just the advertising business.
It struck me after the earnings came out yesterday, they were really good. I mean, in any sort of vacuum, you take a look at the incredible growth and the sort of resurgence and a whole host of businesses. These are really strong businesses. The fact that shares are falling highlights just how much hopes and dreams have been baked into the share prices. How much does that really limit how much higher these shares can go, simply because it's going to take time to monetize AI to the degree that a lot of people were expecting?
Yeah, you're absolutely right. When you look at Microsoft and Google, the results were fine. It's almost like the market's looking for a bit of a reason to pull back, and that's understandable given the run that they've recently had. But we do think this is a gap year for Gen AI. We had the excitement in 2023. We really get the monetization noticeable in 2025. So the big question is, will the market be patient and wait for that to come through? The one area where we are seeing monetization is in cloud computing. So Microsoft Azure did see 28% growth, which was a beat. 6 percentage points came from AI. Google Cloud also accelerated and beat expectations. So that's where we think we do see the AI monetization first. What will be fascinating to see is whether or not Amazon Web Services can keep pace when they report on Thursday. They don't have the same AI partnerships that Google and Microsoft have. Obviously, Microsoft with OpenAI and Google with their own large language models. So that's where we see maybe some risk is more share loss for Amazon coming. So we'll be looking for that on Thursday evening.
Stefan, you mentioned Microsoft. Goldman had an interesting take on where the growth is actually coming from. Allow me to share this quote with you. The stock reaction is muted as, quote, investors are likely weighing the strength of Gen AI's outsized contribution, driving 6 percentage points of Azure growth in the quarter against a slowing core base. Is that good news or is that bad news? What's your read on that?
I think what we're seeing is, as I said before, Microsoft Azure is taking share, 6% of growth coming from AI. And I think where there was some disappointment was the lack of detail around Copilot. They basically said what ServiceNow said last week with their Gen AI product, which is we're seeing lots of interest, the fastest ramping product ever, but we're only a couple of months into it. So no data around, actually usage just yet. I think the other thing people are concerned about today is CapEx. When you look at Microsoft and Alphabet, CapEx was up year over year by about 50% on average between the two of them. And they both said that CapEx growth from here would be notable or material. And so you're starting to get increasing concern about what those returns are going to look like on that CapEx. That was an issue we started to see last summer. When you look at these stocks from a valuation basis, on a PE basis, they're still reasonable, arguably. When you include stock comp, maybe 30 times earnings this year for Microsoft, 22 for Google. But when you start to look at those free cash flow yields getting pressured by CapEx, Microsoft in particular below 3%, that's what investors are going to be looking at. When can we get the returns? When will it start to make those free cash flow yields look a bit more attractive?
Are you satisfied with the cost discipline over at Alphabet?
Look, one of our themes this year is the year of efficiency turns into years of efficiency. And we're seeing that, right? We saw Alphabet, $1.2 billion charge in Q4 for restructuring, $700 million charge, guidance for Q1 for layoffs. Obviously, Microsoft taking out Activision headcount, SAP last week taking out 8,000 people. These companies will be growing revenues this year, double digits, basically without growing headcount. And actually, we think that's one of the most exciting sort of underappreciated stories with Gen AI. Not what it does for these companies on the top line, it's what it does for software and tech companies on the margin as they use software development co-pilots to improve productivity and efficiency, and also as it helps sales and marketing efficiency. So that's where we think the excitement will come this year as we see more efficiency coming through for tech stocks.
Interesting final point. Stefan, great to catch up. Stefan Slawinski there of BNP Paribas. Here's the pre-market price section for you. Let's just go through the names quickly. Alphabet, Microsoft, AMD. We've got Microsoft down a little more than 1%. Alphabet is down by almost 6%. AMD is off by 6.6%. Worth pointing out again, Microsoft was up 65% over the last 12 months. Alphabet was up 60%. AMD was up 80% or something like that since the end of October, Bramo. So that gives you a picture of where things have been over the last few months.
And how much of the hopes and dreams of AI and the monetization has been baked into AMD. They're a perfect example. They talk about this particular accelerator chip that could compete with NVIDIA on some level with artificial intelligence. They're expecting it to be more than $3.5 billion in sales this year. Sounds great, right? Wall Street was expecting $8 billion. Forget it. That's the reason why people are kind of selling the shares.
What did you make of that final line? The year of efficiency is going to be years of efficiency.
I think it's really important to kind of sit on that, given that we've heard about layoffs at UPS, PayPal, Google, Amazon, Citi, Macy's, eBay, Microsoft, Shell, Sports Illustrated, Wayfair. The names just keep piling in. And not just that, but we heard from Microsoft yesterday, they want an AI-first workforce rather than hiring large numbers of new people to focus on technology. Just throwing it out there. What does that mean?
I think we know what that means.
Exactly.
I think we know what that means. Equity futures right now on the S&P bouncing just a touch. We're negative about 0.5%. Coming up next, the latest Bloomberg Morning Consult poll from New York. This is Bloomberg.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Equities down this morning. Good morning to you. Pulling back on the S&P 500. Pretty muted price action yesterday. This morning down 0.5%. On the Nasdaq 100 down by more than 1%. The real weakness in tech, we'll talk about that in a moment. The Russell doing okay. The small caps up 1/3 of 1% this morning. In the bond market, Fed decision day, 2-year, 10-year. Let's look at a 2-year. 2-year closing. The day of the last Fed meeting at about 442.65. The 10-year just north of 4%. The last day the Fed met. Look at us now. The 10-year just north of 4%. We're at 4.0164% that day, 4.0279. Haven't done much in between these two meetings.
Is this victory, right? Are we going to hear victory from the Federal Reserve that feels like we are getting this sort of soft landing, disinflation? Probably not. People are going to parse through the outlook here. And even though Stephanie Roth thought that this would be a snoozer, I think that the big takeaway is most likely to be they're preparing for a cut. It's just unclear when.
I've got nothing to sell here. Every note I've read something like non-committal. A non-committal Chairman Powell in this meeting. Maybe that's what it is. I just remember last time, the 1-2 punch of Powell, we talked about it. Williams, we're not really talking about it. We're all going to ask the same question in the presser today. Are we talking about it or not?
Exactly. Are they talking? And if they are, what are some of the parameters? And maybe Jay Powell will weigh in on the German Chancellor.
What's the German Chancellor got to say about it all?
I don't know. I'm just thinking, if Lagarde is going to weigh in on,
why not?
on U.S. politics.
Why not? Oh, it's just so bizarre. I don't know why Lagarde is doing this over the last week. It just feels so odd, inappropriate to weigh in on U.S. politics, given her position at the top of the ECB.
I think it speaks, though, to this sort of existential question in Europe, which is how do you ignite growth further on? If you're looking at a manufacturing sector that's leveraged to China, and you're looking at an energy sector that's been leveraged to Russia and now leveraged more to Qatar. So this is like some of the sort of existential questions, and maybe she's trying to address it. This is me giving her the benefit of the doubt.
They're just all things you can say privately to European leaders. I'm not sure why you would say them publicly, repeatedly. I think you do it once. Maybe you can sit here and say, got a bit carried away on TV, interviews. Sometimes we say things we don't mean. We do that lots of times. But when you start to do it every other time you have an interview, you kind of take a little bit more notice, don't you?
Yeah, absolutely. It was multiple times with our very own Francine Lacroix, and now it's with CNN. And she keeps going back to these core 3 issues: tariffs, climate, and NATO, and the defense sector in Europe.
The euro right now, 108.39, negative by 0.06%. This is the distraction. We're talking about that, and we're not talking about the inflation numbers, Lisa, out of the Eurozone.
Which have actually been really good, right? We saw French inflation come down to the lowest going back more than 2 years. We're talking about German inflation, the CPI print coming out at 8 a.m. Eastern time. Christine Lagarde also saying this, and this I think is interesting. It got overshadowed yesterday. Everyone on the Governing Council agrees the next move is a cut. That is pretty clear cut. Yes, it's basically what the market is baking in. Are we going to hear similar language from the Federal Reserve, given that the inflation data is cooperating here too?
That Fed decision just around the corner. Let's get to the latest this morning. Mega cap tech earnings disappointing, under surveillance, our top story. Microsoft reporting revenue growth at the fastest pace since 2022, yet investors still wanting clarity on the future of AI. Google reporting weakness in its core search business, raising concerns as to how much it could continue to keep up with AI competition. And chipmaker AMD sliding in the pre-market after a weaker than expected revenue forecast as it struggles to keep up with Nvidia and Intel. AMD is down by a little more than 6%. We've done this a few times already. I think it's worth repeating. This is a name that was up something like 80% since the end of October. It's had a massive run.
And people are talking about, or we're talking about, I talked to a couple tech investors who said it should be the Mag 8, it should be the Magnificent 8, and AMD is in there with them because they're developing some of these highfalutin chips. The key is they are. The key is people are ordering them. They just aren't expecting to monetize that as quickly. This is the hopes and dreams getting ahead of the reality, which takes longer to actually put out there.
I'm still just astonished by how much the market is taking off. And I think is what you said, Lisa, earlier, the fact that it's the expectations almost too high. I read it in one of the notes is that someone said it's healthy but not robust enough. But it's pretty healthy when you look at some of these numbers.
Let's turn to our next story. Mention the Fed. Here's the highlight for you. Investors expecting the Fed to hold rates steady, hoping they'll get some guidance from Chair Jay Powell about when cuts could begin when he speaks at 2:30 Eastern Time. Markets pushing back bets since the December decision with a 40% chance of cuts in March. The Fed facing stronger than expected economic data, yet a clearer path towards 2% inflation after numbers just last week. A final story here. Former President Donald Trump expanding his lead over President Joe Biden in key swing states ahead of November's presidential election. The latest Bloomberg Morning Consult poll showing Trump leading in all 7 swing states. Voter concerns about immigration gaining ground on the economy is the top issue. AMH 6 in 10 swing state voters say President Joe Biden bears responsibility for a surge in migrants at the U.S.-Mexico border.
Yeah, this latest installation of our poll shows for the first time that more voters than previous surveys we've conducted, along with Morning Consult, that immigration is their top issue. And then you ask them who's to blame for immigration, it's President Joe Biden, as well as Democrats in Congress. One thing to note, though, a caveat, a lot of what the survey shows is that voters in these swing states also understand the root causes of immigration. They also talk about the fact that they do know that this is due to famine or chaos in some of the countries they're leaving. But this is going to be a massive issue for the Biden administration. And it's why you see Trump harping on it and campaigning on it and telling the Republican lawmakers in Congress not to give Joe Biden a border deal.
Let's turn to the former president. Greg Valliere of AGF Investments weighing in on Trump's influence, writing this. Members of both parties are stunned by Donald Trump's audacity. He's calling the shots on Capitol Hill, bullying the rookie Mike Johnson in the House and the frail Mitch McConnell in the Senate. Trump may single-handedly block an immigration bill. Greg joins us now for more. Greg, is that your base case now for this year, for the year ahead?
I think so. I mean, there's an outside chance, John, that we could revive an immigration bill, but I wouldn't put it at much more than 20%. It's a long shot.
Well, Greg, when you look at what's going on right now in Congress, please help us contextualize this. The House is on the path to impeach Secretary Mayorkas, the same individual who is negotiating with Senate Republicans to try to get a border deal done. Is this appropriate? How does this make any sense?
To me, is another signal that the House does not want a bill, as we've all been talking about for the last couple of weeks, that Donald Trump wants to keep the issue for himself for November, and it looks like he's got it. And you know, guys, I have to say, after looking at those polling numbers, as of now, Trump is the front runner. If the election were held tonight, I think Trump would win fairly comfortably.
There's one caveat to our poll, which is the vulnerability of Trump if he is convicted. You know, he's facing 4 of those indictments, 91 charges. But back to the border, if there is such a strong deal that comes out of the Senate and the House decides to vote it down, will voters in November blame those House Republicans and potentially vote them out?
They could. I think the House is going to flip